All right. It is 1 p.m., just a little after 1 p.m. Eastern Standard Time, and this is going to be 3 hours of dedicated time talking about all things about raising capital. And so we're calling this our Raising Capital Marathon. And so we're going to give maybe another a couple of seconds here for a couple more of you to come in. We had well over 300 people register for this webinar, and so hopefully you've dedicated this time so you can focus on this webinar. So we're going to teach you a lot of different things around raising capital and what we're doing here at PassiveInvesting.com, and really kind of opening up the different layers of the onion, if you will, and kind of unpacking a few things. And so you have myself, Dan Handford here, one of the managing partners of PassiveInvesting.com. Then you also have on the other side of your screen there, Andrew Davis. He is our Director of Investor Relations. And so you're going to hear from both of us today. We're going to be on here for 3 hours, and we want this thing to be as interactive as possible. So honestly, this needs to be more of a conversation that we're going to have back and forth. And we've disabled the chat box because we want you, if you have questions, for us to focus on one area instead of trying to jump around at multiple areas to make sure we answered everybody's questions. So if you have questions throughout the webinar today, make sure you go locate that Q&A box and you type your questions in there. And as we're going throughout, we'll stop, answer some of those questions, because if you're thinking of the question, chances are somebody else is also thinking of that question as well. And I also have lunch. I have some lunch sitting here with me, and I got another salad over here. So you're actually going to have lunch with me today. Excuse me. As I'm trying to swallow some of my food and talk at the same time. So as we're going back and forth, you're going to probably hear me eating a little bit and having some lunch and just enjoying this time and sharing with you around a lot of these different things that we're doing here at PassiveInvesting.com. So let's go ahead and first start with some introductions. So, some of you maybe have heard about us before, or maybe this is your first time seeing us. Maybe you saw one of the emails and promotionals, and you just now jumped in and said, hey, I don't know who these guys are, but they definitely look like they've raised quite a bit of money. And so let me see what they have to say to see if this is something that's worth it for us to jump in here. So let me turn it over to you first, Andrew. Have you give your introduction, and we'll kind of go back and forth on these introductions first as everybody's filling in.
Absolutely. Well, Dan, thank you so much. And it's so good to be here with you all today to talk about this topic that is near and dear to my heart. So I'm Andrew Davis, and I'm the Director of Investor Relations for PassiveInvesting.com. And since we have 3 hours, I can give you my full bio here. So my background is in sales, actually consumer packaged goods sales was how I started out. And really the thing that I enjoyed most about that was the relationship piece and building relationships with customers and clients over the long period of time and providing value to them. And as I just kind of grew in my career and also got very, very interested in real estate investing became a close to full-time side hustle for me in addition to my career managing sales teams. And got to this point, a mentor told me that if you can find the convergence, if you think of a Venn diagram where you have your interests, your aptitudes, and your opportunities, and if you can land right there, then that's going to be your work sweet spot. And I was very, very fortunate about 2 years ago, almost to the date now, to start with working for Dan and PassiveInvesting.com, and have very much found my sweet spot in my love for real estate, my aptitudes and interests in people, and establishing long-term connections and relationships with people, and then of course the opportunity that was provided to me here. And so been with PassiveInvesting.com for just over 2 years now. Started out as an investor relations associate, and now am the director of investor relations for our group, and have a team that handles all of our kind of ingoing or incoming investor leads, making sure that anybody that's interested in our group and investing with us is going to get connected with, get their questions answered, and then have somebody on my team that they can have an ongoing relationship and connection with. And then we also handle all the investor services as well. So everything from PPMs to wiring and soft commitments and funding and all those elements, portals, fair market valuations, et cetera, et cetera. And so it's been an amazing couple of years for me to be a part of the growth that we have experienced. And we're going to talk a lot about that and how we've raised close to $600 million since inception. But that's a little bit about me work-wise. And personally, I live in Asheville, North Carolina with my beautiful wife, Isabel, and our golden doodle, Piper. I've been up here for about 2 years or so. And so when I'm not working, love to just hang out around here. If you've been here, it's a beautiful place. If not, highly recommend you come visit, travel, spend time with friends, volunteer at church, read. Pretty low key when we stay close to home. But I'm very, very, very passionate and engaged in all things real estate. But then if you have followed me or kind of heard from me, or seen maybe previous webinars, MFIN webinars that I've done previously, I think one of the things within that I'm really, really passionate about is creating a really valuable experience for investors. And that's really the focus point for what we do and why we do it, is building those long-term relationships with investors where they keep coming back and investing with you over and over again. We're going to dig into all the whys behind the reasons why we think people invest with us over and over again, and even maybe some of the things that we're doing and building on to continue to grow and ensure that we have those relationships for life. So that's a little bit about me.
Now, did you tell them exactly what you were selling?
No, I figured that you would. I figured that you would bring that up.
That's my favorite part. That's my favorite part about your story. He used to sell crap, is what it was. Literally, that's what he used to sell.
That is correct. I worked for 2 large consumer goods companies, both of which sold fertilizer, and one of the main ingredients in many forms of fertilizer is animal byproducts. So yes, I literally used to sell crap. And if you can sell crap, then you can sell anything.
As long as you're not selling crap right now, we're good, right?
Correct.
But in that business, it was okay to have a crappy service because you were selling with a crappy product.
I was selling crap. That's right.
I love it. Well, let me tell everybody a little bit about my story, my background. So I actually am a chiropractor by trade. A lot of people don't realize that about me, but I used to be a chiropractor. I say I used to be because I just recently, this past year, non-renewed my license. So technically, I still have the diploma on my wall, but I don't practice chiropractic anymore, and haven't really practiced it in probably going on about 6 or 7 years now. And so I'm full-time here at passiveinvesting.com, but I've learned a lot of strategies and a lot of things along the way in my prior business career and running our medical clinics. We now have 4 medical clinics, my wife and I. We still have them. They're 100% debt-free, and they caused a problem for us where in the beginning we were, I was working in the clinics day in and day out, and one of the things that I noticed in the very beginning when I first got started back in 2011, right out of school, I graduated in December of 2010. 2011, hung the shingle with my own clinic and started seeing patients and doing really well with it. And after about 2 years of doing that, I really kind of, it hit me that I was really stuck in a job because I could only see so many people every hour. I can only see so many patients an hour, and they're only paying me a certain amount for each one of those encounters. And so I had capped out my income by me being a solo practitioner in that kind of a space. And the other problem is if I wanted to go on vacation, I couldn't because I was in what I like to call a dancing bear business, right? So I'm this dancing bear, and then if I stop dancing, guess what happens? I stop, my revenue stops. So I have to continue to keep dancing so I can continue to get that money in. And if I wanted to go on vacation, I still had to pay my staff. I still had to pay the overhead. I still had to pay, all the, the utilities and, all these different things that I just I had to pay even more to go on vacation, and I of course had to pay for the vacation too. And so I really found myself stuck there, and so started to hire on some associate chiropractors to come in and work with me. That helped out a lot. But then I really fell in love with the CEO aspect of what we do and what I was doing, and started to really just kind of be the grand puppeteer of it all, right? Being able to just manage things as a CEO. And I went to a conference before I talk about the conference, I actually I found myself, having challenges of, growth. And one of the things I had to do is I had to learn the art of delegation. And if I was going to be able to grow, I needed to be able to learn how to delegate certain tasks that I should not be doing. And so I was able to figure out, identify some of those different areas where I needed to let somebody else do it so I could focus on the growth aspect. So two main things that I learned from the very beginning is that I have to measure my KPIs, those key performance indicators, if I'm going to be able to manage them properly. And I also had to learn to delegate certain tasks that I really shouldn't be doing, that I was doing because, as many entrepreneurs are, I felt like I was the best at doing everything, right? I feel like I can do everything better than everybody else. And it's probably, I say it's probably true. I still have this problem today, right? So it's not like it's one of those things that all of a sudden I just changed my mindset and it changed for me. I struggle with it every single day of doing things that I really shouldn't be doing because I feel like I could do it better than everybody else. But one of the things I had to tell myself is that even though I feel like I can do everything better than everybody else, I can't do everything and also focus on the growth aspect of the businesses. And so I had to learn to be able to delegate certain tasks. And I had to kind of play a mind trick with myself and say, even though, Dan, you're the best at everything, right? Pat myself on the back, even though you can do it all, you can't grow that way. And so if you could hire somebody and they can do it about 80 to 85% as good as you, then it's still worth it for you to be able to let somebody else do it so you can focus on those additional strategic objectives of being able to grow the company. And so playing that kind of a mind game and mind shift game with me really helped me. And that's really when I started to see the hockey stick growth in our business. We went from one location to 4 locations, and today we have 4 medical clinics that are cash flow positive. They're 100% debt free, and that's really what led me into the real estate game, because I was making great money, and I was working all year long and having to pay a large chunk of that to the government. Not just 6-figure checks once a year at the end of the year. As you know, as you own a business, you have to write those checks quarterly. And so I'm writing these large 6-figure checks on a quarterly basis. And it was just gut wrenching to think that you're working all this time and write these big checks. And of course, at that time is, when I started to, hear about some of these other, really wealthy people that they use a lot of techniques like depreciation, like we all know about, to be able to help reduce that. And so me being able to get into real estate and be able to have the depreciation helped me to be able to offset that taxable liability. And when we started to kind of go into this real estate game, and that was back in the early part of 2018. And in February of 2018, I stepped away completely from our medical clinics, and I said, I'm going to step away. And I made that decision at a conference on a Friday night. I was actually in Las Vegas listening to a gentleman talk about how, how I needed to be the CEO in the business, right? And I was like, well, I thought I was, right? And I needed to, not necessarily the CEO, but the general. I needed to be the general in the business, because the general is not in the front lines, right? He sends his people out into the front lines and has his hierarchy of people, of his leaders in that group. And for me, I felt like I was that general, but then I was like, you know what? I'm putting out fires every day. I'm handling things that I really shouldn't be handling. And I had a team there that could do that. And so I started thinking about my team, and I was like, you know what? I need to just make this decision and bite the bullet. So on a Saturday morning, I made that. I made the decision on a Friday night. But on a Saturday morning, when I flew back from the conference, I talked to my wife about it, and she thought I was, of course, crazy at first, because she's like, now what are we going to do? You're not running the businesses anymore. So what's going to happen? And so we thought about it and prayed about it, and then on Sunday just continued to ask for some guidance, and just basically said, this is the direction that I feel like the Lord's leading us and moving us into that direction. And so on Monday morning, I had a meeting with our COO at the time, and I told him what I wanted to do, and told him I was going to promote him and give him a pay raise and have him become the CEO. And he's like, well, I'm pretty much doing everything as it is now anyway, so it won't be that hard for me, And so for me, it was a great transition. And that Tuesday after that meeting, I had a kind of a live broadcast meeting with my entire team. We have about 35, 40 full-time employees in that group, and made the announcement. And some of them are like, what, are you dying? Is something happening? Do you have personal issues, personal health issues? And I was like, no, I'm not. It's just, I feel like I'm being led in this other direction. And that's really when I started my wife and I started to invest passively first with several different operators. And then we hired on a mentor that helped us kind of learn the ropes of the space. Also, in the beginning, we started to do some co-GPing with two groups, and those were both associated with our mentor that we hired at the time. Well, actually, one of them was my mentor, and the other one was a mentee of the mentor that we had become friends with. And our first couple of projects was partnering and co-GPing to kind of build our relationship, build our track record, to really be more confident in front of the brokers and the sellers and even investors. Because a lot of the investors that were my family and friends were like, wait a minute, I thought you were a chiropractor, and all of a sudden now you're asking me for money to go buy a $50 million property. And so there was a messaging disconnect there. So I had to prime those investors and prime the kind of the investor flow, if you will, for what we were doing and trying to build that track record. And so December of 2018 is when we ended up, forming the relationship with our partners. And actually prior to that, in the fall, we formed a relationship with our other managing partners, and Danny and Brandon, and got us to the point where we are in December of 2018 and acquiring our very first property together, which was a $8.9 million asset out of Greenville, South Carolina, 130 units. And then, shortly after that, we started to acquire even more and more. And I'm going to share our path to that track record of getting to a little over $500 million in private equity raised from non-institutional partners. So up to this point, we have not accepted any institutional money. It's been all from private, high net worth, accredited investors. So if you're interested in trying to find high net worth, accredited investors and how to treat them properly and how to keep them close to you, that's what this Raising Capital Marathon today is about. I want to teach you some of these different techniques and some of these different strategies that we have been able to use and implement, and also so that you can take those and use them for yourself and your own business. I will say that we do have a Raising Capital intensive that we're doing. So we don't do any coaching or mentoring or anything like that. We have a live conference once a year called the MFIN Con, the Multifamily Investor Nation Convention. And we're doing it in Charlotte, North Carolina this year. So if you go to mfincon.com, and we'll pop some of these links in here into your chat box so you can have those links. If you'd like to be able to see those, you can certainly do that. And then I'm also going to give you a link to sign up for our intensive that we have coming up. So we have an intensive called our Raising Capital Intensive. We have sold out of these events the last 3 times that we have done them, and we limit them to 30 people. So if you're interested in this, you can certainly go to the website and find out more information. You can see the links there. And then I will give you a promo code, I'll probably give you a promo code in about 15, 20 minutes that will give you a discount on the registration. I got to figure out what that discount is first. I can't remember. So maybe one of my team members will message me and just tell me what we decided on. I can't remember. I'm thinking it was $500, but they might say, no, you said 1,000. So I'll have them pop it in. Okay, it's $500. So I'm going to give you $500 off. And we can't give you too much off of it because we do sell out of these, and we want to make sure that we can maximize it for everybody that's there. And if you go to the intensive page, and it's right there in your chat box from Hannah there, you can click on that link, and it'll bring you to the website. Use that promo code as you're checking out, the word marathon, and it'll give you $500 off those tickets. That's actually done right here in this city, Columbia, South Carolina. I was about to say this office, but this office is a little bit too small for us to have 30 people in it. So we're going to do it in one of the downtown high-rise buildings in Columbia, South Carolina, right across from the state capitol. Beautiful skyline. We'll be in the top floor of one of the private executive clubs up there, and you'll be able to have that interaction with not just me, but Andrew and all of our team members that are around Raising Capital and investor services, investor relations. Even some of our marketing team is going to be there as well. So you can have some interactions with them. And then we're going to go over to my lake house on Monday night of the event, and we'll have a beautiful time there on the boat, on the water, and having a nice time with some food and some drinks and stuff like that. And it'll be a good time for us to kind of get together around even our fire pit that we have out there. It's at the end of February.
I was going to say, don't forget a massive bonfire.
Oh yes, yeah. I love our little fire pit that we have in the back. It's a 4-foot diameter steel fire pit, and we load that thing up with a lot of wood. We usually go through about a half a quart of wood every time we do one of these events, because we're just loading it up, and it's a lot of fun. So
Dan, I have a quick question for you.
Yeah, go ahead.
All right. So I think one of the things that's really, as we dive into this with, looks like we have, 139 people. I'm so glad y'all are here. So, if you know anything about us, which I'm sure you do, which is why you're here, you know that we've raised, close to, since inception, close to 600 million now, since we began. And last year just shy of 300 million. But Dan, I'm curious to you, when you're making that transition from your medical clinics into full-time real estate, and you were doing those first couple raises, what were the main things? Like, if there was a main principle, or kind of like hey, I knew this, I did this in my medical clinics, I just have to kind of translate it a little bit for real estate, because I know a lot of those same principles, or some of those same principles apply to use to market and gain client, trust. Because if you're a medical service provider, there's a big trust element there as well, right? Just like with investing, selling crap, there's a partial trust element. But when people let you crack their backs, and then of course when people give you big chunks of capital to invest on or for them, or entrust you with their capital. So I guess I'm just curious, what was something that you had really learned or internalized from your time doing the medical clinics that made that transition easier, or that kind of gave you the confidence to jump in and raise capital?
Yeah. So I would say what's interesting is like, a lot of times you go to a conference, they'll say, make sure you reach out to your family members or your friends or whatever. And, I actually didn't raise any money for my family. Right, the people that actually trusted me did not invest with me. As a matter of fact, up to this point, I have not had one family member invest with me, and it's not because they don't trust me. They do trust me, but my family doesn't. I don't come from a long list of family members that have just make a bunch of money. I don't. None of my like close family members I know of that are even accredited investors. So they don't even have the opportunity to invest. And so a lot of times a lot of times the family side of things is not even in question, like it was with me. And so it was really my close network of friends where they just knew that everything that I was doing up to that point was proving to be successful. And so I want to continue to invest with him and prove that to him. But one of the things that you said is like, what did you learn, or what kind of translated over from the medical clinics? And one of the things that is from a sales perspective is very challenging is in the very beginning is learning to be fully present when you're talking to an investor, because that's one thing I had to learn as a physician is I had to learn that as I'm interacting with customers, or excuse me, with these patients, I'm going from room to room to room to room. And every time I walk in that room, I have to put everything else aside, and I have to be able to be 100% present and focused on that person in front of me. I can't worry about and think about anything else that's going on around me. I have to shift and train myself to go into it. And once I started to learn that strategy, I'll tell you, it is quite exhausting. And you know this as well, Andrew, with taking a lot of investor phone calls in a particular day. You do 8, 10, 12, 15 phone calls in a day. At the end of the day, you're just like, I don't want to talk to anybody else. I'm tired, and it's because you're shifting your mindset and being fully present and focused on each one of those different investor encounters. And I will tell you that is something that really helped me, because investors can sense whether or not you're paying attention. Like even right now, guess what I did on my screen? I got my email down. I put myself do not disturb on my Teams program. I have nothing up, right? I don't want. The only thing I have is my little notepad here with my notes, and I have my food here, right? I'm eating my lunch, and I have my little Coke, and that's pretty much it. I got everything is turned off, so I'm not distracted, because I want to make sure that I'm fully present for those 140 plus people that are sitting here on the webinar with us, and making sure that that even when you come into this office and the end of February and you want to learn from us one-on-one, in 3 hours I can share with you guys a few things, but we really spend that whole 2-day process of really uncovering a lot of things and diving deep and allowing you to be in a room full of people that are really high-level players. And one of the things that you'll notice is when you come to this event, there is a lot of high-level players. This is not an event that's going to cost you a couple $100. This is an event that's normally $4,000, and we're going to discount it for you today for $500. but it's going to be worth it to you. And we give you a guarantee. If you come to this event and you don't feel like it's valuable, you just let me know and I'll give you all your money back, right?
Yeah.
Because we want to make sure that you know that we want you to get value. And we do that with every single one of our MFI and intensive events, and not one person has ever asked for a refund. And it's because we know that there's a lot of value in what we're doing and that you're going to be able to learn, but it's not just value in us. It's value in being in a room full of people that are doing things on a high level. Because
right.
somebody who's doing things on a basic level and they're just kind of getting their feet wet, they're not going to spend $4,000 to come in and listen to me and Andrew and the rest of our team that has raised over $500 million and private equity from private accredited investors for 2 days, right? They're going to want to go to a conference that's going to maybe charge $300 or $400 to go sit in a conference with about 3 to 4 to 500 people and get that kind of group content. We're doing this. There's only 30 people that are allowed to be here, and we haven't even really started to promote that event. I think we've already sold 5 or 6 of those tickets already. And so, once they're gone, they're gone. You're not going to come to this event and go, oh, Dan started selling a bunch of tickets, so he doubled it to 60. That's not what we're going to do. We're going to close it down once we sell the rest of those remaining, I think 24 or 25 tickets that are left. So if you want to be in that room, I would highly encourage you to do that. And again, the purpose of this 3-hour marathon is not to pitch you the whole time. We're going to mention it here in the beginning. I mentioned it, towards the middle and towards the end. But the goal is to share with you some of this information that we're going to share with you about how we got to where we are today, so you can kind of get a little bit of a sneak peek into what additional things you're going to learn there. And then one thing is that every time we do that event, we always go around the room and we ask people to share how much they actually have under management as far as assets under management. And I'm always surprised at how much equity we have under management. And now we even have some of those people that have seen some success. They hire new, directors of investor relations or associates, and they send them to our intensive to get the training because of how good it is. And we go around the room, we ask them their assets under management. And the last event we did, I don't know if do you remember, Andrew, how many we had at the last event?
It was over 3 billion.
Yeah, we were at 4.5 billion in assets
right.
in one room with just 30 people in it. And so if you don't think that being in a room full of 4.5 billion in assets under management is not valuable, then you might as well just give up the business, right? I mean, that's a very, very powerful room to be in. And we counted a blessing for us and a treat for us, because we learn things from you too. You come to an event like that, we get to share ideas with each other. We're going to go to the lake house, talk shop, but also talk about, families and different things that we're doing even outside of what we're doing with the syndication space, and, just what's next on the horizon, right? And of course, 2023 is going to be an interesting year. Every year, I guess, is an interesting year, but this is going to, I think, be even more unique and more interesting because of what's happening in the debt market and, what's going to happen with cap rates with multifamily. And, even when you come to this event, we'll uncover and share a few things that we're doing from other asset classes that we're doing with, we're also in the self-storage and hotels and express car washes and even our debt fund that we have in addition to multifamily. So if you're raising capital for multifamily, this is definitely an event you want to be at. And Hannah, if you would just type in that email address, that website address one more time for those that just joined us, a few more people that just joined. And if you use that promo code, she's going to share with you in there, which is marathon, then you'll get $500 off those tickets. Okay. All right.
One thing I want to highlight there that you said too, that I think is really, really important is this is going to be a challenging year. And we know, right, if you look at kind of since we started and our trajectory, we know that there's headwinds, and we talk to a lot of investors. You all on this call as well are aware of the headwinds in the marketplace. And if you're newer to raising capital, you may look at those as prohibitive to being able to come in and raise capital. But one of the really valuable things about being in a room like the one that we'll be in here in a few weeks, and I guess in about a month, is that you're with other people that are doing it and have successfully done it and are doing it in quote unquote easier environments, but also more challenging environments as well. And so being around people that are just consistently following very simple, not always easy, but very simple practices in order to attract and then retain investors and raise capital. This next market cycle, we're excited. And I think that's one of the valuable things too about being in a room like this. Is a lot of people when there's bad economic news or stock market crashes or whatever it may be, they kind of stick their head in the sand and just pray for the best. And that is not our strategy whatsoever. And the people in this room, the same. And so you get great insights, you get different perspectives, et cetera, that could supercharge your business and where you want to go. So I think, yeah, there's always, I mean, even as a leader or a facilitator in the group, I always get a ton of value, and I walk away feeling like I've made some great connections and learned a lot, and people have found partners, new ideas, et cetera. So I would just very much agree. And the other thing I would point out too about what we do, and Dan, I know you get asked to coach people all the time on a one-on-one basis, or do you have a coaching program? And I was even hosting a dinner on Friday night, and somebody asked me about, do you have a coaching program? And the answer is, yeah, this is it. We don't do some, 50 grand a year coaching program. And that's very, very intentional and strategic. And it's intentional for you, Dan, and the leadership of passiveinvesting.com, and that you don't want to direct attention away from what we're doing, which is building a multi-generational wealth creation machine invested in different asset classes and providing a ton of value to our investors. But then also, so that's one element of it. But then two, what we wanted to do is to kind of create and synthesize all the value that you would get, or say 80 to 90% of the value that you would get in coaching directly with you or somebody else, and do it for a fraction of the cost. And so we provide all the content, just requires a little bit more initiative on the individual's part in order to access it. So anyways, it's an incredibly valuable time. I'm really looking forward to it. And my team will be there as well, in addition to me.
Well, let's dive into some of this information here and share with you some stuff, because like I said, our goal isn't just to pitch you this thing the whole time, but it's definitely something that we're very passionate about. Looking forward to having each one of you there. I know all of you can't come to it because there's over 145 people on here now, and I actually just pulled up the website. There's only 23 seats available now. So let's go ahead and dive into this first topic that we told you we'd talk about, which is the passiveinvesting.com growth and trajectory to where we are today to get to this, almost 600 million and not in assets under management. So, I don't know if some of you read that wrong, but it's 588 million in equity, like private equity that we have raised from our investors. This is our assets under management right now that we have acquired. Our assets under management is about 1.3 to 1.4 billion in assets. We have actually acquired close to about 1.8 billion in assets since 2018, and we've sold a few assets and gone full cycle on a couple of projects, which is why that was the assets under management is a little bit lower, which is always good, right? Last year we actually acquired, I think it was maybe close to 660 million, somewhere around in there in assets across 37 different properties, and that's across all the different asset classes that we're acquiring right now. And so let me just share with you my screen here. I have a little device here called a remarkable device. Maybe you guys have heard of that before. I'm going to share this with you so you can kind of see where we are as far as this trajectory is concerned. Let me pull this down real quick. All right, so everybody, you can see here on your screen. Can you see us okay, Andrew?
Yep.
A little circle I just drew there. All right, I'm going to erase that circle. Yeah, cool. I'm not the best artist, but circles are pretty good. And once I start doing other shapes, that's when I start to lose it. So bear with me from my artistic ability here, if you will. So one of the things I wanted to share with you is this kind of trajectory that we've been on. So in 2018, we ended up raising right at $4 million. Okay, and that was probably the hardest year, because the hardest year, that year was our first year. So we were trying to convince people what we're doing, and we're trying to convince people of exactly what's happening and why I'm shifting from chiropractic. And somebody just typed in here for the link for the event. Let me just type it in real quick here. All right, there you go, Jerry. So it was really the most challenging time, because there was actually two projects that I had co-GP'd on with somebody else that our group had co-GP'd on, and we were raising only $500,000, like 500,000 a piece for, and I ended up, I think myself personally, putting in 200,000 of each. So in order to make that commitment of the $500,000 on each one of those projects, I ended up putting in some of my own cash to be able to get them across the finish line. And because if I tell somebody I'm going to raise a certain amount of money, I'm going to raise that amount of money. I don't want to overshoot. I want to hit whatever I'm going to promise them. And so we definitely were able to do that. But then that very first deal that we raised money on, I think it was about a $2.5 million capital stack from the equity side. And that was one of the hardest raises we've done. And was actually, I'd probably say now it's the second hardest raise we've had. The first one I think is probably the one during COVID, and of course the third hardest one was probably the one we just finished up, Andrew. If you wouldn't agree with me, maybe that for you is probably definitely your hardest since you've been with us. Is that one we just closed out of? I think it was like what, $37 million capital stack on the Banks project.
Well, between banks and stepping, it was over 40.
Yeah. So over 40 million that we had to raise, but basically, in a 60-day period of time, and with all the stuff that's happening in the debt market and stuff, it was challenging. And it wasn't because we didn't have investors investing. We had a bunch of investors investing, but it was just that little extra stretch that we had to get, that we had never raised that much money before. I think the closest to that was like maybe 32 million or something like that. This was, 10 million more than our highest raise. And so we definitely stretched, but we continue to stretch and stretch and stretch. And I think, Andrew, that little bit of money came in like a couple hours before closing.
It did. It was literally down to the wire.
Yeah, so
literally down to the bank wire.
We don't like to do that, but it was definitely stressful, but definitely sometimes happens. So in 2018, we raised 4 million. 2019, we ended up raising 32 million. So we jumped from 4 million to 32 million in 1 year there. And then in 2020, which we all know what happened there, right? This is the COVID year. We actually didn't double as much as we did the year before. We still got 61 million that we ended up raising. And I don't know, Andrew, if you sometimes look at these numbers and go, man, that must have been a pretty easy, kind of slow year based on what we're doing the last 2 years. But what you would say though, Andrew, this is usually when he chimes in. If you look at this line of demarcation I put here, this was pre-Andrew. And this is post-Andrew. This is post-Andrew. So in 2021, we ended up doing 196 million in 2021, which was a big jump, right? And it's interesting because like I said earlier, Andrew, I mean, you look at this and I go, I can do things better than anybody else. And if I can hire somebody, that's what I did when I hired you, Andrew. I was like, he could probably do it about 80 to 85% as good as me, And yes, there definitely was momentum that was building up to this point, right? I mean, I'm not going to, I think you would agree with that too, but
100%.
I think it was me being able to focus on the growth and bringing in new investors, and you being able to take care of those investors and really manage that investor relations process, which we can now have 100% full attention on, versus me, where I allocated, I think, maybe 2 or 3 days a week to be able to focus on it. And you're now 100% of your time is focused on that. Yep. And I think that was definitely a pivotal decision for us. And what's funny is I talked to my mentor about this. He's like, "Yeah, I did it a year ago, Dan." He's like, "You're never going to look back." He goes, "You're gonna love it if you can do that, and it'll be able to free you up to be able to do a lot more things, to be able to kind of focus on the growth and the overall strategic objectives of the company." Yeah. And so, I mean, I don't know if you have any other things to say there or not, but.
Oh, I would just say, I mean, yes, there was a tremendous amount of momentum, and I think too, I think it allowed you. I learned from everything that you did, and then I just got to get a lot of reps in as well. And that's one of the things that I coach my team on with sales. Even if you have a sales background, even if you have all the kind of natural dispositions and skill set for that, it's still a very nuanced sales cycle. And so really for me, it was because you were willing to hand off responsibility, I just got to just take more calls than you did. I mean, there would be weeks that I would take 40 or 50 calls in a week, and my calendar would be full all day, every day. And so, there's no mystery there, right? Practice makes perfect. And I just got a lot of repetitions and was able to, I think, just step in and allow you to step back and work on marketing and strategic growth. And that was the year also that we went from multifamily, and then we started into self-storage that year as well. And I think that also allowed you time and freedom to look at some additional asset classes too. So yeah, it was a great first year.
Yep.
Yeah.
And then 2022, let's look at that number. you have that final number for me?
296.
296. And these are not aggregated numbers, folks. These are numbers that each individual year we raise that particular amount. And not one iota, and Andrew can confirm this, not one iota of institutional capital have we brought in. Our average check size is 127,000. But one thing that's very important is there's actually one key metric that we look at that we feel like has allowed us to have this success. And we're going to cover that in a little bit. We got 3 hours together. I guess now we got 2 hours and 20 minutes left with each other. But we're going to share what that is that we feel like is one of the things that has really helped us get to this point. And I love it. It's really exciting. And it's funny because, before Andrew came on, I knew that this metric was important, but we really didn't start to look at it until Andrew was like, hey, we need to figure out what this number is, because he was looking at it from a perspective of, I think it'd be great to be able to share with investors, prospective investors, of this particular metric, because it will help them want to invest with us as well, and also help us with this metric. And so when we share it with you, you're going to be quite interested, and it'll be an interesting metric in the next few minutes or so as we uncover that. So this right here has been the trajectory for passiveinvesting.com to get to the point where we have raised that what was it, 588 million. I'm just calculating this up to make sure these numbers are correct. Yeah, so they're off by maybe $1 million somewhere. So 589 million is what I have calculated here, but almost 600 million. So I like to say, Andrew, a little over half a billion, right? Because it sounds more, right? Like that. It sounds more sexy when we talk about it, especially with investors, because you talk about credibility. Being able to share those kind of numbers definitely helps. That we have over $500 million that we have raised from private, high net worth accredited investors, just like yourself. With an average check size of 127,000. There are definitely some checks in there that increase that. And if we were to take away some of those checks, it's probably closer to maybe 90 to 100,000 as far as our median number, if you will, instead of the average number there. But I think it definitely has been really neat to see this. And 2023, our goal is to raise another probably what do we say, 350, 400? What's our goal this year? 400 million. So last year we didn't hit our goal. Matter of fact, last year our goal was 350 million, and we didn't hit it. And so I think a lot of that's because of the market and things like that. But we didn't make any excuses, right? We were like, you know what? But that's okay. Our goal is going to stay at 350. I'd rather come short of a goal of 350 than come short of a goal of, say, 200 or 150, just because oh, woe is me, the market's not doing well. As long as we can stick to our criteria, find great quality assets that cash flow very well, let's continue to raise some good quality capital for our investors, and Dan, that'll allow us to get there.
When you're setting a goal, because I think that there's a really important perspective behind that. Why set the larger goal that you might not achieve versus a smaller goal that's more achievable? What does the larger, kind of more ambitious goal create, or why do we do that?
Yeah. So good question there. So, obviously when you're setting a smaller goal or a goal that's easy to achieve, it doesn't make you have to sit down and come up with ways to achieve that goal, because you basically just do the same thing. Like if I raise, 32 million a year, let's just do the same thing next year and raise another 32 million. Great. But if we can set those goals that are higher than what we really think we have an easy chance of achieving, it allows us to be able to think about things and to be able to bring up questions that we have to answer, because we have to be able to achieve that goal. So I'll give you an example in a different business, right? Let's say you're trying to grow a franchise, you're trying to grow a brand. Well, if you have set yourself a goal to open up 5 new locations, well, there's a few questions you got to ask. But if you say, I want to open up 100 locations this year, you got to start thinking a little bit more strategically. You got to be thinking about how you're going to promote and market to get more franchisors. I mean, obviously franchisees that can come in and buy those franchises, and start to build out a team of territorial managers and people to help out from site selection. So there's a lot of those types of things that you have to answer and think about that growing and scaling aspect. And one of the nice things, somebody asked me in here earlier, Jerry just asked this question in here about, how much did your team grow each year? And I'll say that, that's one thing that, we don't have the 2 hours and 15 minutes left to be able to cover all of that, because there's a long story that I have on that, but we will be sharing that at the MFI and intensive, so you can have that. But I will say that one of the things that has allowed us to grow is one of the things we did in the very beginning is, the partners at PassiveInvesting.com, Danny Brandon and myself, we said, you know what? We are only going to take those asset management fees for passive investing and keep it at PassiveInvesting.com. That will allow us to grow as our portfolio grows. So the more assets that we acquire, the more asset management fees we have coming in, and that puts more money in the bank account, which allows us to hire more and more people to be able to manage the assets. Right now, we're sitting here with over 50 full-time people at PassiveInvesting.com, and that's not dealing with anything that has to do with property management. I know a lot of groups will say, "Oh, we got over 100 people, because we also own our own property management company." Well, we don't own our own property management company, except for in car wash, because there was no property management company available there. But in that company, we have over 150 people that work for us in that company. But not including that company, with just the group at PassiveInvesting.com, we have over 50 full-time people that are working for us in acquisitions and dispositions, and our analysts and our finance department and our investor relations, investor services, and capital markets. And there's a business that we have created with this. And I truly believe that if you are in this business, you should treat it like a true business. This should not be done as a side hobby or as something that you do for fun on the nights and weekends. You're taking people's hard-earned money and they're entrusting you with it, and you must have full-time efforts and focused on this. Now, this is not saying that you can't be working a job and trying to get into this space to make the transition, but you shouldn't be doing it as you should not be the main operator, is what I'm saying. As the main operator, you should have full-time focus and efforts on this. So if you are working a 9-to-5 job right now and you want to get into this space, go partner with an operator that has full-time people managing it, and you be the co-GP that helps them. I know a lot of people that get into this space that way, and a lot of times they love that piece of it the most, and that's all they do is just raise capital. And there's nothing wrong with that. Matter of fact, we do have some co-GPs that still work with us today that help us be able to acquire some of our assets. And we're not going to cover kind of that structure that we have right now, but at the intensive, we're going to dive deep into that. As a matter of fact, we're going to have one of our co-GPs there, so that you can actually talk to them about their experience and how they've structured it and what they do to be able to raise capital. They like to be, up on the I say stage. It's a room of 30 people, so they're always be in front of the room, right? There is no stage. We want it to be very interactive and very low key. But that's something that we want to make sure that you realize is that there is opportunities to get into this business without being a full-time operator. You could just come in and help from an asset management perspective and raise some capital and kind of get by that way and do really, really well with it. And we'll kind of uncover some of those different ways when you come to that event as well. So anything else on this, Andrew, that I haven't touched on that maybe we should touch on? Anything at this point?
No, I don't think so. I think you've hit it really well in terms of identifying the growth. I think it's really, it's slotting. It's you don't get to 300 million in equity raised or 200 million in equity raised without a team. These aren't individual contributor numbers, and the way that those exist is by finding great people and putting them in the right position. So definitely something that can be grown to, but there's been a lot of foundational work going into where we're at today.
Where are we at today in 2023? Do you have those numbers? Ballpark?
In terms of what we've raised to date?
Yep.
Just in 2023?
Just in 2023. So our goal is 400 million. So where are we?
I do. I'll pull it up right now. So
it's probably not a lot because we've only really released one deal this year.
That's more than you might think, Mr. Handford. We've raised over 20 million so far this year.
All right. So we only have 380 left to go.
Oh, is that all?
That's it. So that's our goal for the year. So as you're thinking about this and watching this webinar, what's your goal, right? If you haven't set your goal for the year, make sure you set that goal. maybe it's not 400 million, right? Maybe you've only raised, a couple million or a couple 100,000 last year, and maybe a couple, 20, 30 million. But, where do you want to be? Set that goal. That's very hard for you to achieve. So you can start to answer some questions and have questions that rise up in your head of like, how can we achieve this if this is what we want to do? And to be able to set that plan in place. And you will walk away from the event down here in Columbia, South Carolina with that plan and that game plan in place so that you know exactly what to do step by step. Okay. All right, so let's pivot from this and let me see here. I'm gonna jump back over here and see. We're gonna go over first the kind of process that you really need to have in order. Let me clear my my notepad out here, little new pad here. All right, I have a couple questions that have come in here. Let's answer some of these first, Andrew, and we'll go from there. You want to tackle that first one from Jared?
Yep, I got it. So the question from Jared is, are you raising capital in a blind fund, or are these for properties you are working to close? So very good question. So typically the way that we raise capital, and it's dependent on asset classes. So I'll give a little bit of color there. So when we acquire a multifamily asset, for example, generally what we're doing is we're buying large institutional quality assets. And what that refers to is the class of the asset, the size of the asset, generally the location of the asset. So these are assets that are in strong primary markets in the Sun Belt. They're newer construction assets, bare minimum 150 plus units. The deal that we referenced that we closed last month was 252 units in one asset and 44 in another. So roughly 300 units there. So on those types of assets, multifamily, we do what's called a single asset syndication or a single asset raise, where we have one deal that we're raising capital for. We put it under contract. The managing partners will put up generally some hard money day one in order for us to secure that asset. And then we go and we raise capital for that asset. However, we have recently moved into other asset classes where the equity piece is much smaller. And so what we'll do in those cases, and I'm referring specifically to car wash or self-storage, is we'll do what's called a semi-blind fund. So generally what we'll do is we'll create a fund where we've identified one or maybe two or three assets that are going to go into that fund, but we've not identified all the assets in that fund. But the initial assets going into that fund give a very clear indication of the types of returns, the type of asset that we're targeting, et cetera. So our typical raise is going to have at least some assets identified. We've yet to do a truly blind fund.
So one of the questions that have come in here is, the question is, what is the ratio of investors that come back deal after deal versus those that don't have the means to invest in more than one deal every few years? We will get to that question. Right now, I'm going to table it, and I'll promise you we're going to answer that question. It's actually part of the content today. So great question there, Michael, and we will definitely get to that question later on. The next question here is, how much have you raised with the help of outside sources like the co-GPs? So in each one of the projects that we put together, it's roughly about 20%, about 20 to 30% of that capital comes from co-GPs. So the majority of the capital that's coming in is coming from our own network of investors, but we do have that network of, I'd probably say it's a handful of the co-GPs that are pretty much on just every project that we have, because we feel like those people have got us to where we are today. And so we want those groups to continue to work with us, because we feel like, not necessarily we owe it to them, but, I guess we do. I feel like we kind of owe it to them to allow them to continue to work with us. And even though we feel like we can raise all the money ourselves at this point, we feel like it's best for us to also bring them along with us so that they can continue on with that ride of continuing to grow with us as well. So good question there, Irish Kevin. All right, there's another question here right now. I'm an aspiring GP and a LP in 3 deals at the moment. Congratulations, that is awesome. I am working on building my prospective investor list, knowing I should own my goal set. But if I ask you what would be a reasonable first-year goal, what would your answer be? So I think that question is, number one, how many or how much have you actually raised from investors at this point? And you have to ask yourself, okay, if you haven't raised any money yet, you have to ask yourself, how many people do you know in your list that could potentially bring in some money? And so instead of trying to say, okay, I just want to, I'm a first year aspiring GP, how much should I raise? I'll tell you what I did when I first got started. I really didn't have a goal. It was like, okay, I could maybe raise $500,000 or, $1 million, per deal. It was really $500,000 per deal is what I started with. I said, okay, my goal is I want to see if I can actually do this thing, right? Because you don't want to go out there and tell a person that you're trying to co-GP with that, hey, I got, a $1, $2, $3, $4 million worth of investors that I know I could bring in here. And then you go out there and raise and it just doesn't happen, right? So what you have to do is you have to, one of the first things I did was I opened up my phone. Okay. I opened up the contacts in my phone and I said, okay, of these contacts that are in this phone right now, I went through every single one of them. And I don't know how many I have, right? I had back then, but I got over 1,000 people's names in my phone now. And I literally went like name by name in my phone going, yep, nope, yep. And most of it was like, nope, yep, or maybe, right? Very few of mine in my contact list was like, oh yeah, they could definitely do it. And the rule of thumb, and it's actually, I just looked this up. I have 2,103 people in my list right now. That's crazy. How much that's grown. So maybe I had 1,000 back then. I don't know. But there's definitely, looking through that list is one of the first things that I did to figure out who in my current circle could I bring in as an investor. And then I called them. I just said, you know what? I don't care what they say. I don't care what they think. At least they know what I'm doing. I'm going to call every single one of them. And I had some people telling me, no, we're not going to probably do that. We don't like real estate, or, I prefer paying. I actually had one guy say, no, I prefer paying my share of taxes. I don't really want to, have to get into depreciation to offset it. I was like shocked. I was like, never had anybody tell me that before. But
you didn't have an objection handler for I like paying taxes.
No, I was just like, okay, bye-bye. Like I got to respond to something like that. But again, it's having those conversations with people in your current circle of influence. And what I did to set my first goal was how much, if I didn't raise any money, could I put in myself to make sure I could hit that commitment with that co-GP? And so that's how I set that first goal is how much could I put in myself? And that way I'm not telling a co-GP, hey, I can raise $500,000, but I can't, right? Because like I told you earlier on, those first two deals that I raised $500,000 for, I raised about $300,000 from outside people, but then I closed the gap, I think, with 200 or at least 150 of my own cash just to get it through the finish line. But I put pressure on myself, right? I put pressure on myself and I made phone calls. And, I say now we don't have to make as many phone calls, but those last two deals we did, Andrew, and just them,
phone calls.
We did a lot. I mean, there was a lot of phone calls and, a lot of like flying out to people and meeting them and greeting them. Cause if you're some of our investors we knew could put in, a nice 7-figure check at this time because they've done it before. And being able to, call them and talk to them and meet them at their house or their business or whatever, and continue to build that relationship is really what helped us kind of get through the finish line on those different projects. And, we ended up not raising the full amount before we closed. So we were able to, we got enough money in to close, but then we had to raise the rest of it for like the operating reserves and our fees and stuff like that after we closed. And I think it probably took about, 2 to 3 weeks after we closed to really finish out and really feel comfortable about the raise. But it took a lot of phone calls. And so if you want to get into this space, you have to be very cognizant of the fact that you're going to have to get on the phone. You're going to have to get in person with people. You have to get people to know you. And that's one thing that, I think is very important. I'm going to cover that mindset here in just a moment. I got a few more people in here that have asked some questions, but so I don't know if I really answered your question about being an aspiring GP, other than it really depends on your personal situation and what you need to do. So that's definitely something that I think, you gotta think about, and don't overshoot. Always undershoot, under promise and over deliver. That's how I do things with investor relations as well, right? When we do our underwriting, we try to under project what we're going to do. Our goal is to never present a deal to investor unless we feel comfortable that deal could produce 20% or more in return every single year. but we don't present 20% to all of our investors. We're going to undershoot that. Sometimes we're down, 12, 13, 14% return on the low end ranges of our exit cap rate scenarios and our sensitivities. And so our goal is to try to keep that 20% return for all of our investors, and we only get into deals that we feel like we can do that with. Okay. All right. Next question in here is, when did you acquire passiveinvesting.com domain, and how has that helped you with your business? Andrew, you want to take this one?
I don't know when I imagine you acquired it in 2018.
We did.
And the question that everybody always wants to know is how much you paid for it. People ask me that all the time, and I actually don't know the answer. But I think that to get to the spirit of the question, I think it's been incredibly valuable to have that domain, to have that credibility, and to go. I do want to go back and touch on the question in terms of setting that first year goal, and this might be a little bit contrarian, but I think that one of the things that's very, very important to know about raising capital versus, I would say, most other types of sales, if you want to look at it as a sales game or as customer relations or whatever you want to call it, is it's a very, very long sales cycle. And what you see with us, and you see that trajectory, and you see where the hockey stick growth happened. But my personal sense would be, if you're raising capital in your first year of raising capital, set a goal that's like a stretch goal for you. So if in your mind you think you can raise 3, maybe make it 6. If you think you can raise 10, make it, or 5, make it 8, whatever it is. But then this is one of the things that we're working on internally right now, is don't spend very much time looking on how much capital you've raised. I would spend much more time looking at how many investor interactions that you've had, how many calls that you've had, how many meetings you set up, how many meetups you've attended, whatever it may be. Look at those lead measures, things you can actually impact, because you may make a ton of phone calls, and in your first year, especially if you don't have a track record, it might be challenging for you to bring in that capital. But what investors are looking for from you is staying power. And if in a year or 2 years or 3 years down the road, you're still raising capital, you're still doing deals, you're still being communicative, and people know what to expect from you, that's when that momentum starts to build. But I'd set a big goal, but then really focus far more on the actions required to achieve it than actually the results. The results will come.
Yeah. Good point there. And just an additional kind of thing around the passiveinvesting.com domain. When the 3 managing partners of passiveinvesting.com got together, one of the things that came into it was, Brandon and myself were kind of in together. He came on with working with me. He didn't come on to me. That sounded kind of weird. When he started working with us, we had a company named Handford Capital at that time. And when Danny came on shortly thereafter, he had one called Randazzo Capital. And so both Randazzo Capital and Handford Capital were challenging names to try to spell and figure out. So if we went on a podcast or we're talking with other investors, it was, they could spell Handford multiple ways. You could, there's only one way to spell capital, the proper way, as far as money capital, but there's also a capital of the city, which has an OL, and some people misspell that. And so, if you try to go to handfordcapital.com, they would mess it up. And so we had to come up with a different name that was very easy to use. And at that time I was part of this mastermind called the War Room, and with Ryan Dice, Perry Belcher, and a few other online internet marketers. And I was at a conference, and if you know anything about Perry Belcher, he is a big domain investor. So he just buys a bunch of domains that he can kind of see things coming up and just buys the domains, and then he holds on to them. I think he has 2,000 or 3,000 properties right now as far as domains, and then he just puts them onto the market, and people buy them, and people offer on it, he can sell them. So he buys them for $20, $30 or whatever they are, and then he can turn around and sell them. It's an investment for him. And so he shared with me how they actually find those domains and how to figure out which ones are in demand. And so that's what I did. I went there and started doing some research. I found a keyword research tool out there that they were using, and found that that word was something that was a very popular phrase, passive investing. And I started doing some research and saw that the domain was available for sale. And I'm not going to share kind of what we paid for it. It's an undisclosed amount, but it was definitely worth what we paid for it to be able to get it. And somebody else did own it, but they were not using it. And so we made an offer to them to buy it. and they came back and gave us another offer, and we went back and forth, I think twice, and ended up buying the domain. And then not only did we just buy the domain, we changed the name of the company. So our company name is actually passiveinvesting.com LLC. Like, that's literally the name of the LLC. So, just like, so it's a marketing, tool or tactic, if you will, or strategy, if you will. Even you've seen like 1-800-contacts, right? Same thing, 1-800-plumber. We're doing the same thing, but using a website, right? So it's passiveinvesting.com, right? And so that, to me, has been definitely something that has been very helpful. Everybody knows how to spell the word passive, and everybody knows how to spell the word investing, and you just put them together. As a matter of fact, now just about every podcast out there promotes us because they talk about how to passively invest. And so there are people always wondering, how am I going to be able to do this passive investing thing? And when they go in there and research, of course, they can find us. And even now, when we acquire a property, we have, because it's a domain, our press releases that get put out by the brokers, guess what? The websites automatically hyperlink our company name back to our websites. Now we're getting these like free backlinks to all these news articles and stuff that are helping us, with our search engine optimization across the board too. When you're thinking about a name, you need to think about something that's very easy to remember. And if you can somehow tie it to a .com, it can be very, very powerful as well, because it's basically telling people, here's your passiveinvesting.com name, but oh, by the way, how do I find you? Go to passiveinvesting.com. They don't even have to ask you what your website is, because it's right there. They don't even have to Google you, because you just go to passiveinvesting.com, right? And so, plus, we don't have any plans to sell passiveinvesting.com as a whole, but let's say we wanted to sell it. It's a lot easier to sell something that's like passiveinvesting.com that can be transitioned to somebody else, to a new owner, versus trying to sell something like Randazzo Capital or Handford Capital, which are tied to our own personal name and likeness. And we didn't want to do that, right? We also didn't want to be in another dancing bear business, right? So, I feel really comfortable with our team that if I wanted to step away for a month, as a matter of fact, I usually do that about once a year. And you can ask Andrew, every July, usually I take off for an entire month, and I try to turn most of the stuff off. I'm usually one day a week or whatever, jumping in and responding to emails. And if there's something urgent, they know how to get a hold of me. But I feel very comfortable that I can step away, and I'm not in a dancing bear business anymore, right? I don't have to be working full time every day, every day of the year with passiveinvesting.com, because now we have this team that's been built out, right? I still work full time in it, so don't get me wrong, but I have the flexibility to be able to travel when I want and spend time with the family all that I want. And that's one thing we didn't really share too much, Andrew. It's kind of our family side of things. But I mean, I feel like we have a very good working balance with family and business. And like, I have 4 children myself, and I'm married to a beautiful lady, and getting ready to have our 15-year anniversary later this year, and going to spend some time in Hawaii for a week, just her and I. But my children are fairly young too. I have 4, like I said. I have a 12-year-old girl, a 10-year-old boy, and a 6 and a 5-year-old girl. And so, while we're building this kind of monstrosity of a business here, I still feel like I've had a great balance of being able to still spend time with my family and focus on them. And those are some additional things also that we're going to be covering at that intensive coming up too, in February. And I know we're coming up about an hour and 10 minutes into this thing, but I do want to share with you just one thing on here. And I got a lot of questions coming in. So these questions are great. And we're going to kind of jump back and forth answering some of these questions, and also going back to some of the content, because I want to make sure that we cover the content that we have for you, because these questions that are coming in are great, and I love it. And I want to get to as many of these as possible. And we'll have plenty of time to do that for some of this Q&A. This is almost like an AMA, right? An ask me anything type of a session. But I do want to share with you about with this page here. Let me see if I can pop this out real quick just to share with you this. One second. Oop, wrong button. All right, so here is the landing page for that website if you haven't gone to it just yet, so you can kind of see what's available here. So this is the website. I said it was 24, 25. There's only 23 seats available now. Some of you may have gone in there and purchased. I'm not really monitoring that too closely right now, but you'll walk away with that customized written capital raising plan that you can implement whenever you leave this event. And it's going to be February 27th and 28th. It's a 2-day event. Here in Columbia, South Carolina. It's only available for those 30 people. And you can also go here and see some of the testimonials. from some of the people that have been to our event and some of the success that they have had and some of the things that they've learned as well. And so if you want to, jump over there, you can kind of listen to some of their testimonials. Obviously, you can see here, this is that track record that I shared with you earlier. How they have gotten to that. Maybe that's where that number was off. You're at 295 million last year. And then, of course, you can see the topics we're going to be covering here: finding investors, onboarding new investors, raising capital, maintaining investors, the use of the code GPs, the 506 Bravo versus Charlie, the post-deal investor management, and of course, we'll be talking about the regulation A+, which is very cool. It's something that we're working on here in 2023. Of course, you can see some of these other topics here. And of course, this is going to be the team members that are going to be there with you. So you have myself, you have Melissa Broom, who's our Director of Marketing and PR, the handsome Director of Investor Relations with us today, Andrew Davis, with his beautiful hair there. I wish I had that beautiful set of hair there, Andrew. That's just amazing. Did you get it cut, or is it still the same?
No, I cut it. I was
going to say, it looks a little bit less long. So anyway, hopefully you donated it because it was getting pretty long. So some beautiful locks that were coming off of it. Then we have Taylor there, Taylor and Marco. They are our two investor relations associates. And Andrew's going to share with you in a little bit how he was able to train those two investor relations associates and how they've been able to see some success. And then, of course, our investor services team members here, Aspen and Emily, they're going to be there with us. Those are our investor services support people. Like Andrew said earlier, those are the people that are handling all the back end stuff, right? How they're handling the PPMs and the ACH updates, and the interactions with investors of getting their accreditation letters completed and processed, and the whole compliance side of things. And then, of course, there we can't forget Misty. She is our investor relations project manager, very, very valuable resource, and being able to manage a lot of the different projects that we're working on. And another aside with Misty and Melissa is that both of their husbands actually work in our car wash brand with the HRA management side of things. So both of them, very, very stellar people. Both Melissa and Misty, as well as Cameron and Mitch, have been phenomenal people. So and just so you know, I'm going to try to get, I haven't told them this yet, I'm going to try to get them to bring their spouses with them too, because Melissa and Cameron and Mitch are really cool people to hang around, and they got a lot of breadth and knowledge around car wash. And we'll talk a little bit about that at the event, about what we're doing with car wash and how we're building it to a national brand over 200 to 300 locations, and potentially doing an IPO with it, and how our investors are going to really be able to capitalize on that, and to give you some more ideas on what you can do as maybe this type of a business or other businesses that you could present to your investors, even outside of just doing the standard kind of multifamily side of things. Anyway, a bunch of little perks here: investor management templates and investor call scripts, and those kind of things and stuff like that. All the tech tools we use. Some example, newsletters that we send out to our investors. And of course, this one-on-one interaction with our team, and this exclusive dinner. My wife will be there, so she is planning on being there. And having that, we're going to take out our boat on Lake Murray. We actually just got a new boat delivered last week. It's a Nautique wakeboard boat. So hopefully we'll be able to take that one out. Not to go wakeboarding, because it'll be in the evening, obviously, but hopefully we'll be able to take that one out, as well as our kind of our party boat, which oddly enough does have a potty on it, but because it's one of those like double-decker boats, but so one of those tri-tunes. But we'll be able to take both of those out and have a lot of fun. So if you want to go to the website, check it out there and register, and love to be able to see you there. All right, so let's get back to some of the content, and then we'll answer some of these questions here, because I know that there's quite a few questions that have come in here. Matter of fact, I have 9 pending questions in here, which is great. Let's see. I just had somebody come in here and said, hypothetically speaking, of course, if someone returns to the training, if they come to the MFI intensive again, does it mean they failed the class for the first time? And I'll tell you. Well, it's funny because we actually have somebody who is actually come to every single one of the raising capital intensives that we've done. And it's funny because I make fun of him at the event. Like, and if you can't pick it up the first time, you can do what this guy's doing and come again, right? But it's oddly enough, we do have people that want to repeat it. They also send some of their investor relations team to the event. so they can get that interaction. And so yes, we can definitely do that, Sandy. That's no problem at all. And she's actually one of the testimonials on the website. So you can go there and listen to her testimonial. But it's also, because it's the only opportunity that people have to really be around us and our team and very exclusively, it is a very valuable time, not just with our team, but with the other high-level people that are there. And there's been so many partnerships that have been created there, and even co-GP relationships that get created at that event that can really help you. So it's definitely valuable to come to multiple ones, even if you've been once before. Come again. We're more than happy to have you. And I think it's one of those things where you're always going to learn something different each time you come, right? And you just need to have that one golden nugget that can really transition yourself into something more and more powerful. All right, so let me share my screen again, because I want to share this mindset with everyone and kind of really share with you kind of what kind of impact this can have. So some of you may have heard me do this before, and if you have, just bear with me through this, because it's very valuable for people when they're first figuring out this side of the business to really understand and learn these different strategies. And so what I want you to do right now is everybody who's on here, I want you to go get a blank piece of paper. Go get a blank piece of paper, and I want you to draw something on here and also follow along with us. So go ahead and do that now. You can, when you get that piece of paper, what I want you to do is I want you to draw this big triangle, okay? And I'm going to tell you that, yes, you could just take a snapshot of the screen when I'm done to get this, but having that action of taking your pen or your pencil and drawing this with me will hopefully make it solidified even more, okay? So I want you to draw that triangle on your screen. I'm not on your screen. Don't do that, because you might mess your screen up. Even if it's dry erase, it might be a porous surface and it would mess your screen up. So don't draw on your screen. But what I want you to do is just draw with me here. And let me see if I can actually change the layers on this thing. And let me see if I can change this to just there we go. Look at that. Took off the back, so all those lines in the background. I think this is the first time I've actually done this where I actually took out those lines. So in the middle of this, I want you to write the word investor triad. And the reason why I go over this so much is because it's an important piece to how we've gotten to the success that we have. This investor triad. And in the top of this investor triad, what I want you to do is to write the word no. In the bottom left-hand corner, I want you to write the word like. And then in the bottom right-hand corner, I want you to write the word trust. This like no, like, and then trust right here, okay? And what I'm going to do here is I'm going to do a poll real quick, and I'm going to open up your chat box. So not your Q&A box, so don't put this in the Q&A box, or you're going to drive me nuts. And if you just like driving me nuts, I guess you could do it. But anyway, so I'm going to give you some instructions here. So in your box here, what I'd like for you to do in the chat box, I want you to answer one of these three things. And again, if you've already heard this before, don't answer, okay? I'm going to open this up so that everybody can see the responses that everybody else is having. And I'm going to turn it off again so that, we're not, distracted by the chats. But I want you to, in your chat box right now, of these three things, know, like, and trust, which one of those three things do you think is the most important? So right now, go to your chat box and let me know, which one do you think is the most important? Is it know, like, or trust? So I know there's a lot of people on here. There's over 150 people on here right now. So all right, here they go. They're coming in. All right, they're coming in hot. You've heard that song before, right? I won't try to sing it for you because I'm not the best singer, if you will. My wife is the one who's gifted with the ability to sing as well as for music, and so are my kids. But me, the only instrument that I play is the keyboard, and that is actually this keyboard, right? I'm not talking about a piano keyboard. That's the only one that I've really been able to master. All right, so we got a lot of people. As you guys can see this, just take a quick look at this in a poll, all right? I'm going to go ahead and close this down now so nobody else can chat with each other. But as you can see here, I'm seeing no, trust, no, trust, no, trust, trust. Not one person said like, and normally we get a few likes that get thrown in there. But I want to change your mindset a little bit with this, okay? We have this know, like, and trust. The number one thing here is actually this one right at the top, this know. And I want you to write a box around it, and I want you to write a bunch of arrows towards it, okay? And this way, you'll know that you need to think about this in your investor management process, this investor triad. This feels a little odd here. I should probably put another one here to even it out for my OCD. So the reason why no is the most important is because, let me actually see this. I get a few people, I did get 2 people just driving me nuts. I think they just did it on purpose on the Q&A box. Either that or they fell asleep when I was saying that. But anyway, so knowing the no part is the most important, because so many times we try to focus on like getting people to trust us or getting people to like us, that we forget that we have to get people to know us. Because if you don't get enough people to get to know who you are, then they never have an opportunity to be able to get to the point where they can actually make a decision as to whether or not they actually like or trust you. So we have to be able to focus on that. And that's some of the things that we're going to talk about, today in a little bit, but we're also going to cover that in a lot more depth and a lot more detail at the intensive that's coming up at the end of February. And I know some of you probably already have plans. I have a couple people in here asking about, I had somebody else, Christine in here said, don't blame Sandia. It's always fun to hang out with the PI crew. So thank you for that, Christine. Appreciate it. Glad to have you as an alumni to that event as well, and making those comments. And so anyway, so we got to make sure that we focus on that, right? We have to get to the point where people can get to know us. And once people get to know us, then at that point in time, they will now have the opportunity to get to the point of being able to make a decision as to whether or not they like us or not, right? And then, of course, once they get to know it, once they like you, that's when you got to set up a process in place to get them to actually trust you, okay? And one thing that you have to be careful of here is a lot of times we focus so much on trying to attract and please everyone that we forget that we are people. And my favorite phrase here, Andrew, people are people, right? And it's one of my favorite phrases that I came up with at one of our intensives. And the reason why it's so important is because if you just be yourself and you just be true and authentic to who you are, there's going to be people that are not going to like you. And it's actually sometimes challenging for some people, like even myself. Like I like people I want people to actually like me, right? But when you're in a space like this where you're trying to fill your funnel with a lot of people, you have to realize that there are going to be people that do not want to hear from you anymore because they don't like you. Whether that's your attitude or your demeanor or maybe who you associate yourself with, there's going to be people that aren't going to like you. Matter of fact, at one point in time on this webinar, we had almost close to 155 or 160 people. There's already people that have dropped off. We're all the way down to 152 right now. So guess what? Maybe they had something to do or something, but you know what? There's probably people that heard me talk and heard Andrew talk, and they go, man, these guys are full of beep, and I don't want to listen to them anymore, right? Well, guess what? These are the types of people that are like that. I come over here, I put a big X on them, and there's going to be people that will not like you and that won't follow you. And that's perfectly fine. As a matter of fact, if you don't have people that don't like you, then you're probably being too fake. You're trying to put on this facade of like trying to be all things to all people. And it's just very, very hard to do that and do it very well, especially when you're in a group of people and now you're trying to interact with the people that you know don't like you, but you're trying to bend to do things like them so they do like you when you're really trying to act like people who you really, really are, right? I'll give
Dan,
you.
can I jump in there real quick?
Yeah, go ahead.
Yeah, I think that's it's so important to know that because especially right now, there's a lot of people that are. Oh, my dog just came in for a visit. There's a lot of people right now that are looking to raise capital. We've got 150 plus people, right, that are looking to do that right now. And I think one of the biggest mistakes that people make is they look at a passiveinvesting.com or they look at somebody else that's been successful and they copy and they say, imitation's the most sincere form of flattery. And of course, copy a lot of what we're doing, but it's very important that you distinguish yourself and that who you really are comes across and what makes you different or unique comes across. And so one of the reasons that passiveinvesting.com has been so successful is because of the background and experience of the operational team. Dan's unique background, Danny's unique background, Brandon's unique background. Well, John, aspiring capital raiser, Susie, aspiring capital raiser, you have things that make you distinct. You have a background, you have skill sets, you have interests, you might have a strategy, whatever it may be. So it's very, very important in this process that, of course, you're okay with people going, yeah, not for me, but that's going to help you find the investors that are for you, that like you, that believe in your strategy, and will invest with you over and over again. Just wanted to point that out, how important it is to be distinct.
Yeah. And I had several of you say that you had just jumped on and were wondering where to get this intensive information. So I just typed it there in the chat box area. So if you want to go over to the chat box area, you can see that. And the promo code's in there as well, Marathon, MARATHON. And then you can click that link in there. So thanks for jumping on and telling me that. I had punched it in a few times, but I accidentally send it to the hosts and the panelists instead of everyone. So sorry about that. Got that taken care of. All right. Let's see. Yes, TK says about talking to me. Don't forget about the airplane. So we have an airplane behind us. No, we've actually done one of these events instead of going to our lake house. We did it at our airplane hangar. And so this time and moving forward, we haven't decided to do it at the airplane hangar, mostly because of some of the logistical issues, and we can't take everybody up in the airplane, but we can easily take you out on the water on the boats and stuff like that. So we decided to do that. But good thinking there, TK. Appreciate it. All right. He also mentioned there are 8 billion people on the planet. If 1 billion people don't like you, the odds are still in your favor. 7 to 1. I like that. That's definitely nice. So anyways, let's kind of get back to this process here. So now we're getting people to know us, and we're going to cover some of those, three of those today, and also some more at the intensive, so you can kind of know some of the additional things that we're working on and have been working on. We also have some strategies that we're working on in 2023 that will help us continue to grow, so we can grow from that 295 million raised in 2022 to get to that 400 million mark here in 2023. And we're going to share some of those with you at the event in February as well. So you got to set that strategy ahead of time to fill your funnel with people that will get to know you. One of the reasons why we like to do these webinars, one of the reasons why we like to do our weekly webinars. We've been doing weekly webinars, I don't know, probably for 3 years now. To be able to attract people that want to learn about investing in multifamily, and we do these webinars and talk about how to do it themselves actively. And honestly, they get to one of our webinars and they're like, "Holy cow, this is a lot of work. I don't want to have to deal with all this. Here, Dan, here's my money. You do it." Right. And again, like Andrew said, we don't have a coaching program, right? And so our goal isn't to try to do these webinars to get people to coach with us. We've told ourselves in the very beginning, we don't have the time during the day, nor do we want to have the time during the day to be able to do this, because we want to stay focused on our acquisitions, because that's where we can have the greatest impact for ourselves, but also for our investors. But we also have to make sure we have that strategy in place to make sure that we have the ability to get more and more people to know us. I don't know if you can pull it up real quick, Andrew, but that 30-day number of how many people have actually gone to our website from our software that we're tracking it. We're using one software right now. We're in the process of transitioning to another one. And we'll share with you some of those technologies that we're using at the intensive, so you can kind of see what we're working with and then how we're utilizing technology to our advantage. I also believe technology can be a disadvantage. We'll talk about some of that stuff too, because I think sometimes people utilize technology in the wrong way. And they really should be using technology in a different way, or using more low-key things to be able to attract more capital and stuff. But
so I've got that number pulled up, Dan, which is actually low, but over the last 30 days, we've got 164 new contacts into our database.
So 164 new leads have gone to our website in the last 30 days and filled out the form and said, "Hey, I'm interested in becoming an investor." Okay. And normally that ranges between, on the low end, about 150 to 200. And, even last year on some of the months when we were raising a ton of capital, we had that thing up to about, 400, 500, 600 people that have gone to the website in the rolling 30 days. And
Right.
we're going to talk about some of those metrics and some of those things that we're doing that you have to put into place to make sure that you can raise that, to be able to raise that number, that to be able to increase the number of leads that you have coming into your fold. Because if you don't have a high velocity or any velocity, if you don't have some form of velocity of people coming into your fold every rolling 30 days, it's going to be very, very hard to be in this business. Because, and Andrew, you could probably confirm this. I think we ran these numbers recently, and for every 100 people that come into our website, only about 17 of them will actually invest with us at some point down the line. And so it's about 17%. Most of the operators that I talk to, it's about 11, 12, 13%, somewhere around in there. So again, you got to talk to a lot of people in order to raise a ton of capital, right? And so that's, we have 3 full-time people that all they're doing all day long is talking to investors and talking to them about our group and sharing our background story and sharing with them about what it means to be a passive investor and really cultivating those relationships with them. And so it is a full-time job, but as you grow, it's going to become more of multiple full-time a full-time person's job, right? You got multiple people in your organization that will be handling these phone calls if you're going to do it the right way. And I mean, I know when I first, handed the torch from, doing a lot of these phone calls myself over to Andrew, how many were you doing like on some of your peak weeks and maybe on average?
Yeah, so I think I was averaging somewhere between 35 to 40 calls a week, and then my peak weeks I would do over 50, and I would lose my voice by the end of the week.
Yeah.
Yeah.
So, but you know what?
And that's just new calls. That was just new investors. That wasn't even connecting with existing investors or following up with folks that I had spoken to previously.
And some people go, well, I'm doing 506 Charlie. I don't need to talk to my investors. Well, that's great, but guess what? I'm talking to my investors, and we raise a lot more money. And it's because even though the SEC says because you do a 506 Charlie, you don't have to talk to all your investors, I still want to talk to all my investors because I want to make sure that we are building relationships with our investors and they don't feel like they're just a number, right? I want to make sure that those investors feel like they are a true person. That's one of the reasons why we do a lot of additional things like our investor newsletter, so they can hear from each one of the partners. They can hear from some of our team members. We get their personal phone numbers and we'll text them directly so that they can hear directly from us. We also do our investor dinners. All these things are things that we can do to be able to deepen that relationship. And if all you do is get people to fill out a form on your website and you think that you can have no conversations with them and all you do is just throw them into a funnel and send them an email, you might have a little bit of you might have a little bit of success. You might have we like to have a lot of fun too. So those are my little slips there. I have some success. It's funny because it's hard on a webinar to hear everybody else laughing, but I hope everybody else is laughing on this kind of stuff because I know it's definitely not on purpose that I'm doing this. I just get really excited, I guess. But I mean, hopefully you're having that too a lot. But anyway, I digress here and talk about success instead. Hopefully you're having, good success here and there, but the biggest thing is we want to have phone calls with every single one of our investors to build that relationship with them, build up that rapport, and be able to deepen that relationship with those investors, whether the SEC tells me I have to or not. Okay, we were doing this when we were doing just 506 Bravos. Now we exclusively do 506 Charlies, and we're getting ready to do the Regulation A. And guess what? We're going to be talking to all of our investors as much as we can. And if we have to build out and hire more people because we're doing things differently, we're going to do it. We already have a plan in place right now that we're going to share with you at the intensive of how we're going to continue to build out our team and grow to the point where I have a goal internally that I want to be able to, in one single year, raise $1 billion in capital from just private, high net worth accredited investors. And I know we can do it, right? And we're doing this. We're doing things in stages and in baby steps. but I know that we have the infrastructure. We will have the infrastructure in place to be able to do that and support it. And we're doing things right now to be able to get to that point. And I remember a couple of years ago, Andrew, I was sitting down with one of our co-GPs in their house. I had flown to go see them, and I was my wife and I sitting with them, and with him and his spouse and his wife there, and sat down with them and we were chatting. I was like, wouldn't it be cool one day to be able to, this is like 3 years ago, right? Before we had a lot of this capital we had raised. I was like, wouldn't it be cool one day if we could take down a large $100 million property, And come to find out, the very next year, guess what we did? We took down a $109 million property. It was just crazy. And now we've taken down 2 properties now that had over $100 million in equity, or in equity, excuse me, in value. And we now have this goal that in 1 year we want to be able to acquire enough assets and have enough investors in our fold that we can raise $1 billion in equity, which is crazy to think about. I mean, even right now, it's crazy for me to think about that. Even though right now our goal this year is to do 400 million, I want to more than double that 1 year, right? But we can't do that if we don't continue this process. And this process is an initial step and an initial process. And there's no way you can do that if you're missing one of these key elements. And I kind of talked about it a little bit with the email that we sent out. And the one thing that we're going to talk about is the one metric that you should be following that will allow you to know whether or not you are doing things the right way. And it's a very, very easy metric to track. And I'm going to share that with you here in a little bit. Probably in the next 30 to 45 minutes, we'll cover that. I can't believe we've already been talking for an hour and a half. I mean, this is stuff that is just so much fun. It's just so fun for me that we're just chatting and having a good time, and having little Freudian slips, I guess, here and there on some of these words. But I don't know if I'd call that a Freudian slip, but
I definitely call it a Freudian slip. We know what's on your mind, Dan. Well, I think one really important thing too, as we're talking about this, right? Because as you talk about the know, right, that's the top of the funnel, if you will, right? It's getting exposure for your brand. It's letting people becoming aware of who you are. And I think when you look at our numbers, for example, and you see, oh my gosh, they got 154 new contacts over the last 30 days, and that's low for them. And how will I ever? Well, you don't have to. And one of the really crucial reasons to have a conversation, number one, if you're in this business, you need to have conversations with your investors, because they're investing. This isn't they're not hiring you to clean their house or something like that, or do their landscaping. They're hiring you to manage their money and steward their hard-earned money. But the other thing too is having that phone call. That's a really, really crucial point where you can, in a very short period of time. So I saw a question come in: how long do you allot for calls? We allot 15 minutes for those introductory calls with a gap on either end. So 15 minutes, and then we have a 15-minute gap as well. So if the call runs over, then we have time to make sure that we can answer at least as many of their questions as possible, and then also have time to initiate or engage in our follow-up. But there's something that was written a while ago. It's called 1,000 True Fans. And it's the idea behind it is that you don't need to have 5,000 or 10,000 people in your database. You just need to have really, really quality people that you can work with over and over and over again. So I just wanted to highlight the importance of that. And that also tells you, as a capital raiser, as an operator, you could have 500 people come into your database, but maybe none of them are actually quality leads. And you could have 5 come in and they could all be quality leads, but you're not going to know that until you at least have a conversation with that person.
I'm sitting here chuckling while you're doing that, because I'm reading some of these comments that came in after that little slip earlier. Sam's like, got to know what you were thinking there. And Kevin's like, clear that mind of yours. And Rebecca's saying, ha, I'm laughing too. Sorry, no question. That was funny, Dan. Hey, I'm not perfect, never have claimed to be. And we're just sharing you with some things that come to our mind. And sometimes we have little slips there, sometimes multiple slips. And guess what? I'll probably slip again. Who knows? But anyway, appreciate you guys staying with us. And Kevin said, good way to get attention.
That's right. Just throw sex in there every 15 minutes or so. We'll keep everybody engaged.
Yeah. All right. What's interesting is this could actually work in a dating relationship. No, I'm just kidding. They call it the dating triad. Get people to know you and to like you and then trust you, and then now you're off to getting married. Anyway, all right, let's get back to the topic here. This has been a long investor triad. All right, we're getting people to know us, right? And they're going to immediately make a decision. Most people, in a matter of seconds, usually a matter of about 20 to 30 seconds or less, they've already sized you up and they already know whether or not they like you or not. Okay. Now I'm already down to 142 people. So I guess there's a few people that didn't like my comment, whatever. It is what it is. Or maybe they had things to do since this is a 3-hour marathon around raising capital. So again, we got people, now we have this group of people that like us, right? And this group of people that like us are now on our email list. They're attached to us. And that's one thing that I want you to be cognizant of as well. I just said email list. When you are building out your different strategies, okay, so like one of your strategies could be some sort of social media strategy, whether they be LinkedIn or Facebook or Instagram. I've seen different operators have success with different types of strategies around social media. But do not just keep those people attached to you on that particular social platform. You must do some things to be able to get them off that platform and onto your own platform that you own. Because I've heard of people building a list of, tens of thousands or hundreds of thousands or millions of people following them on Facebook or LinkedIn or, wherever. And somehow they tick off the powers that be at that social platform and they shut them down. Well, guess what? All those years and years of hard work are now gone down the drain, and there's no way for you to get that back. Okay. And so the strategy here is to get them off that platform and on your platform. So your own email list that you control. And that way, all this time and energy and effort is not lost. So that's one of the reasons why we do all these webinars, because if I'm going to drip feed some content on, say, LinkedIn or whatever, I'm going to do these weekly webinars every week too. And that's going to promote people to come over to me, come over to my list so I can continue to market to them and promote to them. Right. And that could be something that can be very, very powerful for you to be able to get to the point of getting them to get off the social media platforms. And it doesn't mean you, let's say, get them off the platforms completely, but they can follow you still on social media. They get them to the point where you can actually follow up with them outside of just through that social media platform. But now they're getting to the point of liking you. And now that once they're on your email list, I had a mentor of mine years ago tell me, he said, once you get customers, pretend that they are they are your herd. They are your people. They're the people they're your customers, they're your clients, they're your investors that you want to keep connected with you as much as possible. I see a lot of mistakes happen with newer operators where they create relationships with people, or they go to a conference and they meet somebody, get their business card, and they just stuff them on an investor list. They have no follow-up with them. They have no interaction with them until they have their next deal. And it might be, 2 or 3 months or 6 months down the road that they hear this next deal and they're like, I don't even know who this person is. Maybe I met him at a conference somewhere, but all of a sudden I'm on this email list. And I personally am on email list where I'm like, I don't even know who that is. I got one the other day, and on the email, they sent me this newsletter update. They were doing things somewhat proper where they had a newsletter update, but then I couldn't figure out who they were. It was like 2 first names of 2 individuals, and nothing was registering in my head. So I'm like, I wonder how I heard about these people, because somehow I got on their email list. And so I started doing some research. I actually went to their website, and I looked on their website, and I'm like, I go to the About Us page, and it has no pictures of people on it at all. All it says is what they do and how they do things. And it's almost like they're trying to hide from something, right? And I'm like, why can't I figure out and see a picture of the person I'm trying to see, right? And so I want our investors to feel like they're interacting with people. And so we will never send out an email communication that says, from the investor relations team, and that's it, right? I want them to know it's coming from Andrew. I want them to know it's either coming from Andrew or from me or from, one of the other partners or from somebody from investor services. And I want them to feel like they know who they're communicating with. Because I don't like it myself. I'm right now invested in a little over 75 different LP positions with about 18 different operators, and I get emails now from these operators, and sometimes I'm like, I really don't like it, because how do I know who to follow up with? They're sending me these emails, but who is it that's sending me these emails? And sometimes I don't even remember the name of the operator because all they have is the name of their company. I'm like, I have to go to their website to even remember the name of the person who's actually operating it, right? And so whenever you send out emails, you want to try to create that personal aspect of the business, right? Try to create that ability to be able to connect with them, because people are people, right? We want those relationships. We want those interactions. We want to be connected. And you have to realize that people want to be directed. They want to be led. They want to have that interaction. If they don't feel like they're connected with you, you're going to have a harder time. Matter of fact, before I got onto this webinar this morning, we had our Express Car Wash team from Hurricane Express Wash. They were in my office. We had, I think, not all of them, I think 13 of the 17 site managers were here in my office. And guess what I was doing? I was teaching them this exact same process, but we actually had what are called check-in greeters at each one of our stacking lanes as the cars are coming in to pay for their car wash. And we don't want people just coming up to a machine and having a machine sell. Matter of fact, before we bought these properties, they come up to the pay station and some lady's voice comes on that sounds like a robot. Hi, thank you for coming to Hurricane Express Wash. Would you like to buy a membership today? And it's like so impersonal. I hate it. And so 100% of the time, I told them, your goal is to have that pay station inoperable. You are the pay station. It needs to be a person that can connect with people and have those interactions. Number one, it'll allow us to have that rapport with these customers that are coming in to wash their cars. But guess what? It's also going to allow us to have that ability to upsell them onto some membership plans, which helps us all across the board. When we take over these sites, whenever we have a rainy day, guess what the seller does? The seller used to do. Bye-bye hourly staff. You get to go home. We're not going to pay you because we're not making any money. But if I always tell the team, like, you can focus on these monthly memberships, we'll have so much cash coming in that you could sit there and come in on a rainy day and you can clean out the pit in the middle of the tunnel on a down day, or go around and pass out some more flyers, and we could still put you to work instead of just saying, oh, well, it's raining. We can't afford you anymore. Because if I have people on a monthly membership, I'm making the same amount of money, whether or not they're coming into the wash or not, right? And so that's the same kind of a concept that we're using here, is making sure that we're building those relationships with people, because the more you can create a relationship with somebody, the more you're going to have the ability to sell them into some sort of an investment that you have later on down the road. And the nice thing about this business is you're not really selling much at all, right? Because this type of a business sells itself, but what you have to really, quote unquote, sell is this right here: trust. That is the point. That's what you eventually have to get to the point of, is letting them first get to know you so you can fill them into your funnel, and it gets them to like you. And so now once they like you, you can now continue to drip feed content to them over time, so they get to the point of hearing enough from you and seeing enough from you that they trust you enough to wire you, $50,000, $100,000, or $500,000, or we've had people wiring over $20 million to us, right? And we've never met them once, and they're wiring us $20 million. That's just crazy to think about, right? And when you start to think about that level of money and that level of trust, I mean, it's a huge amount of trust. And there's one level of trust that's like this, where they get to know you enough and you're dripping enough content to them that they like you to the point of now they've trusted you enough to, let's just say they wired you $100,000, right? Now they've wired you this $100K. There's still a lot of trust in that, right? However, there's one additional layer that has to have an uber amount of trust. I would say this has to be like 3 times as much trust. And this is the point. There's a bad plus sign. They look like, T's. Anyway, those are 3 pluses, if you can imagine that, folks. This next step is the referrals, right? When you get to the point where your investors trust you enough that they're going to refer you their friend or their family member to put their hard-earned money to invest with you, that is a whole nother level of trust, a whole other layer of trust that is actually built up. And what's cool is you can draw this arrow now on your piece of paper back up to know, because this is actually where those referrals come from, right? Referrals are going to come from this increase in trust. And once you do what you say you're going to do, they start seeing those distributions, they start seeing those quick wins, they start seeing that monthly and regular communications, and they're feeling good about their investment. And different people are different in each one of these different layers. Some people will never refer because they're just too afraid of what their friends are going to think if they lost money. But there should be a point in time where they trust you enough that they want to start to refer people to you. We're going to talk about some of that stuff later on, and some of the things that we're doing as well for those referrals. You might be thinking, how can they go from trusting us to all of a sudden going back up to know? That's the referrals that are getting to know you. Those referrals are now in the space of saying, hey, I've now been referred to you, and then they go up here to this knowing phase, okay? And then the really cool thing about referrals is that they're so much easier than just your regular person that meets you and doesn't get referred to you, because they actually take a jump in this investor triad process. So instead of just going back from no and going all the way back down to like, they actually skip it. They go from no, and they actually go from this knowing phase, and they jump down back to trust, because they immediately have that inherent trust when their friend who has been investing with you says, hey, they have an offering that I was telling you about at the ball game the other day, or when we were out hunting or golfing or whatever. Hey, there's this group I've been investing with. They have this offering. Go take a look at it. Those referrals are just so powerful, and that's what will catapult you into the next level of the stratosphere when it comes to investing. Is and are those referrals. Okay, and you have to put some things into place to make sure that you actually get some of those referrals as well. Any other tidbits after this, Andrew?
No, I don't think, especially in a business like this, you can underemphasize both the act of somebody, and this is something I learned back in my my sales, traditional sales career, I guess, is just the act of somebody referring somebody else to you, whether or not the referee, the person that is referred, not doing the referring, whether or not they ever end up actually investing with you or become a customer. It's so important to just understand what a pivotal moment that is in your business. And Dan, I think you would probably say early on, PassiveInvesting.com didn't get a lot of referrals because it's a long sales cycle. And so I use the example of like a plumber or a house cleaner or somebody like that. We had a lady that we hired when we first started moving here to help us manage our vacation rental, and cleaned, and very, very quickly, within a couple of weeks, I could tell this lady's amazing. And I've since referred her out to at least half a dozen people. I don't even think about it because the proof was right there. Now, however, with an investment, that's going to take longer because somebody's going to invest that first 100K with you or 250K, whatever it is. And then they're going to watch. They're going to watch to see if you do what you said you're going to do. Are you communicating the way you said you would? Am I getting my distributions, et cetera? But once somebody refers another investor to you, that's an incredibly valuable person in your tribe or your family, whatever you want to call it, because what they're basically doing is they're putting their reputation on the line. Because if my house cleaner doesn't work out, hey, you know what? Sorry, I thought she was good. I guess not. If somebody, based on the word of their friend or family member, wires you $50,000 or $100,000 or $250,000, and it doesn't work out, that's an awkward water cooler moment. That's an awkward Thanksgiving, whatever it may be. And so you're really those investors that you have that end up becoming referrors are incredibly valuable. And we continue to try to communicate and that value and honor those people that do refer people to us. But again, if you look at referrals as a lead source, that is, in terms of like a customer acquisition cost, like Dan said, that time frame from know, like to trust is greatly consolidated, and those are some of the most valuable relationships that you can build. So that's all I've got there. And I guess we'll talk more at the capital raising event here in about a month or so about some of the things that we've done to really communicate to our investors that are referring how much we value them, and then some of the things that we're currently building in as well to capitalize on that, for lack of a better term. And by capitalize, I just mean make sure that we're properly valuing the people that are referring folks to us.
Yeah.
Mhm.
I don't know about you, Andrew, but I want to take like a 5-minute break. It's like 2:55, got 1 hour left.
Yeah.
I know some of you probably want to step away and go to the bathroom real quick. I like to do that as well. I hope nobody drops off, but I want to take a 5-minute break because I need to, go to the bathroom myself after eating lunch and, having some water here and some Diet Coke. So let's take a 5-minute break and then we'll be back here right at the top of the hour at 3 p.m. Eastern Standard Time. So don't go anywhere. We'll be right back.
See you in a minute.
One thing I was going to mention during this break is if you haven't done it already, I know a couple of you have already gone to the website, filled out the form, and registered for the event. You can do that now, lock in that $500 off. After the webinar today, we're going to be taking away the discount code. So for a few minutes after the webinar, we'll leave it active. But if you want to go ahead and lock that pricing in to get that $500 off, you can do that. For coming to the webinar today. So go to the website there. I just typed it into the chat box for everyone. If you don't see it, just open up your chat box and it should be sitting there. And then we'll be back here at the top of the hour. All right, we are back. We are back and better than ever, and very refreshed, I would say. All right, so let me actually go to the page here. Just want to share this with you one more time. New share. Let's go to the website here. So all of you should have the link now into the website, and you should be able to see this. If not, I'm just going to pop this in here as well, just so you have the link. Several of you have gone to the website, and some of you have mentioned that you're going to register, and you already had a couple people register. And so let me just refresh the page here. Let's see. So all right, there's 17 seats available for this event. So for those 30 available, they've had that updated to 17 seats available. So appreciate to those of you who have made the decision to join us. Looking forward to it. You're going to have a great time. There's going to be a room full of people that are going to have a great time. They're going to be very, very valuable to you, not even just us, right? I think obviously being around my team is going to be very valuable for you, because, I know some people look at our numbers and go, there's no way you're doing that, right? But you just ask each one of our team members and you will know that this is the kind of level that we are working at. So thank you for those of you who have joined us. Again, you can go to the website, see some of the testimonials that have been to the MFI and Intensive before. And you can also see some of the additional topics that we're going to be talking about. And of course, you can be there to be able to see some of our team members and also spend time with each one of the team members and some of their spouses and my wife at the lake house that evening on Monday night, and have a wonderful time. So make sure that you go to the website there between now and the end of the webinar and register, so you can lock in that savings for the $500 off of those prices. So, all right, let's jump back over to the drawing board here. And so we've talked about this investor triad here, and if you had any additional thoughts around this yet, Andrew, during the break?
No, I mean, I think really I did see one question come in that kind of addresses it. And the question was, for 506c investors, how do you incentivize them to talk to you? Some of them feel like they don't need to talk to you since it's 506c. Yeah, it's a great, that's a very good question. Of course, you can't make anybody talk to you. And we have a lot of people in our database that we've not had conversations with. And we're putting some things in place to work on that, to really, to drive people into having that conversation with us, because we think we're quite likable, and you should be quite likable too if you want to raise capital. And if you're not likable, that's okay, but you should partner with somebody that is likable. Because if you're, some people, and I think that's something to mention too, and a great reason to come to an event, or to be really intentional about networking, is to find people. And Dan would tell you this as well, is to find people that are complementary to you, that don't have the same skill sets or interests, but very, very different as well. And so, if maybe you love the analysis portion and you love finding deals, or you love thinking around in spreadsheets, and having 40 or 50 investor calls in a week sounds like absolute death to you, well, then probably find somebody that really enjoys that aspect of it. But I guess to answer your question, you can't make somebody get on the phone with you, but somebody that does schedule a call, that's a strong indicator of interest, especially if it's an accredited high net worth individual, because their time is very valuable. So they're not just picking up the phone and talking to everybody. So I would say, you can't make them get on the phone with you, but those that do and that want to connect with you, those are the really valuable connections that you want to make. And then, of course, I think that the trust component, there's an initial aspect of the trust component, and I would call it maybe a partial trust or introductory trust, but there's a different level of trust with somebody wiring you capital for the first time, $50,000, $100,000, whatever it may be. And then there's a whole nother level of trust in somebody investing with you again and again and again. And then probably a third level of trust in somebody referring as well. So that trust is established initially when those first funds are wired, but then it's cemented over time. And I think that's one of the things that has helped us be as successful as we are, is we have communicated not only in what we say, but also in what we do and how our business is established, that we're here for the long term. You don't expand into multiple different asset classes. You don't have a team of 50 plus just in your core business. If you're a fly-by-night operator, we want to be here for the long term. And quite honestly, if you're raising capital, you should want to be in it for the long term as well. And your investors and your potential investors are going to pick that up. Either, hey, this person's just trying to put a deal or two together and then sail off into the sunset, or no, this is somebody that's going to be around in 3, 5, 10 years, whatever it may be. And I think that's a really key component of as well as communicating that you have a long-term outlook and approach.
Yeah, I definitely agree. We have several questions that are still popping in here into the chat box. So not chat box, the Q&A box. So we'll definitely try to get to as many of these as possible. We got a little under an hour now. So what I'd like to do before we tackle some of these questions is go over a couple of things that I promised you that we would mention to you. And one of them is the 5-step investor management process. And then we're going to talk about the biggest strategy that we use to be able to get investors and the thoughts that we have around that. Also, we're going to talk about the one metric that we use to be able to determine whether or not we're doing things the right way. And then we're going to open up for some more Q&A. Okay, I think we covered most of it there. And let's see here. While you were doing that, I was writing this out, so we'd be a little bit ahead of time. So, all right, so we have this 5-step investor management process here, and we're going to go through these 5 steps. And we're not going to dive deep into very many of these steps because there's a lot of different details into each one of these steps, which is why it takes a little bit of time, we can't cover it all in 3 hours. But guess what? When you come down to the intensive, we're going to spend a 2-day time frame with you and be able to go deep into each one of these things so you can kind of see what this is. So the first step in this process is raising capital, okay? Now, when I say raising capital, some of you might be thinking, well, wait a minute, I thought we were supposed to get people to know us first. Well, to me, raising capital is the process of getting people to know you. It's your marketing outreach and the things that you're doing to get people to know you. So you're raising awareness and raising capital by having conversations with people, seeing how much they're interested in investing, and then adding them to your email list, right? Because if you have phone calls with 100 people, just like we said, and 100 people say, I got $100,000 to invest, what percentage? I would say ballpark, 12 to 15% of those people are going to invest with you. I wouldn't plan for the 17% that we are at. We don't plan for 17%. We're at 17% right now, but that fluctuates, right? And I would say if you ballpark did if you had like a 12% number and said, in order to get 12 people to invest $100,000 a piece, I have to be talking to at least 100 people, right? So how many people do you have to talk to raise $10 million? You can do the math on that, right? And that's kind of the formula that you have to go after. And raising capital is that initial awareness of getting people to know you so that you have the ability to know how much you can actually raise from that base of investors, okay? The second step in the process is what I would call the courting process, okay? The courting phase. And this means that, once you're here and you've actually been able to raise that capital and raise that awareness, now they're in this next step where they actually are now part of your, they're part of your herd, they're inside of your email list, they're attached to you in a way that you can continue to follow up with them over and over and over again. I just zoomed out of that thing. Sorry about that. Now I'm zooming back in. I'm not sure what just happened on my screen. There we go. A little bit better. All right. So this is something that you must always focus on is the raising capital, and number 2, the courting phase of your investors. And this is, again, before they even invest with you, you have to have that process in place so that they're hearing from you multiple ways and not just hearing from you 6 months down the road and when you have your very first deal or your very next deal to present to them. You have to do something to stay in front of them, right? The next phase, this number 3, is actually where the fun actually begins, because in this step right here, this is the securing capital phase. This is where you send out an email or you do a webinar and you're promoting a particular offering. You're saying, okay, 100 investors that I've just talked to since my last deal, I now have another deal. Here it is. This is what we found. This is where it's located. These are all the different things about the market and why we think this deal is going to be so good. And based on our conservative underwriting, this is what the returns that you can expect, right? And that's that securing capital phase. This is where the investors get to the point of really starting to get to know you, right? Because they like you enough, they've heard from you enough that they trust you enough to be able to wire you $100,000 to be able to invest with you, right? Now, let's talk about number 4. Number 4 is once they're in a deal with you and they've now invested with you, we must make sure that there's a process in place to have ongoing communications. Okay? Ongoing communications. And then, so basically, if you tell them, like in our assets for passiveinvesting.com, what we tell our investors is that by the 14th of every month, you are going to have an email in your inbox that tells you about the performance of the property from the prior month. Even if there's something bad going on, if there's good stuff going on, no matter what it is, we want to be able to share that with you. Okay. And if you tell them it's going to be there by the 14th, guess what? You better get it there by the 14th. It shouldn't be the 15th. It shouldn't be the 20th. Shouldn't be at the end of the month. But if you tell them by the end of the month, okay, that's fine. But whatever you tell them, you better do what you say that you can do. Okay. I think there's been maybe once or twice in our last 4 years that we have not sent it out by the 14th, and it was because it was on the weekend. It ended up being on the like the 15th or 16th because it was rolled over on the weekend or something. We should have done it that Friday before if it rolled over on the weekend, which we do that now, but sometimes it's on the weekend, and sometimes I'm in there on the weekends. You know, I always put my final stamp of approval on things when they go out, and I review them and send them out, right? I don't send them out anymore, but you know, our team manages that piece, but I like to put my final eye on a lot of those things. And then number 5 is those coveted referrals. Okay. So let me go back to the investor triad here for a moment, right? So let me just jump back over to this other screen. Here's our investor triad, right? Okay. Now, watch what happens. That 5-step process fits very, very easily in here. Number 1 is raising capital. This is where getting people to get to know us. Once they get to know us and they start to like us, now step number 2 is down here. Well, right next to like. So step number 2 is that ongoing courting phase, that ongoing courting process to continue to get them to hear from you over and over and over again, so they get to the point of wanting to eventually invest with you once they move over here to trust. Now, the trusting phase is where we're over here on this side where they've trust you enough to wire you that $100,000, and now you have built that level of trust so you can secure that capital from them. And then on the other side of trust is actually number 4, and this is where you have those ongoing communications, because once you have that $100,000 and it's invested in a deal, now you got to perform. You got to perform, and you got to send them those ongoing communications. You got to make sure that if there's something going good or bad, you communicate that with them, and that you actually perform on that project. Right? If you tell them you're going to send them certain distributions, you better do it. If it needs to change, obviously change it. Make sure you inform your investors and you communicate that with them. And of course, you can see here, this is pretty obvious. There's number 5. So it fits. These 5 steps fit very easily with this investor triad, this investor process. And at the intensive, we're going to break down and go into a lot of detail with each one of these little pieces here. Let me see if I can zoom in somehow. We're going to go through each one of these in this process, this 5-step investor management process, and go very deep into each one of these things. We're going to go over just about everything that we're doing to be able to get investors to know us. We're going to go through the courting phase and everything that we're doing to continue to communicate and contact our investors, all the way from distributions and ongoing newsletters. And one of the things we do is we have a physical printed newsletter we send to every single one of our investors every single month. It's a lot of work, but it's definitely worth it. I think it's one of the keys that has been one of the keys to our success. I've seen other groups try to do this and they haven't been consistent with it, and it doesn't work. Because if you're not consistent with it, and it's not a consistent product that you're putting out, it's not going to work for you. You have to have that predictability in that process. Number 4 is those ongoing communications, right? And the referrals. So all of these have to be in place. Of course, that securing capital as well. I skipped that one. But all of these have to be in sync and have to be working well for you in order for it to be a smooth running oiled machine, where this machine is set up, this process is set up in a way that you feel confident put in an offer on a deal that might be a little bit of a stretch for you because you know you have the ability to raise capital. Okay, I'm gonna turn it over to Andrew at this point because I want Andrew to share with you. Let me see my little pad here. Trying to go to these next pages. What I want him to share with you is a little bit about the one metric that we use to track whether or not we actually are successful or not in raising capital. And it's something that's very important for you. We talked about it earlier on, and I want you to be able to cover that as well. So Andrew, I'm going to turn it over to you, let you cover that. And then once you get finished there, I'm going to go over our biggest strategy that we use to be able to attract a lot of capital and to raise capital. And then we'll open it up for some additional Q&A.
Absolutely. So really the biggest metric that we use to find out if we're being successful or not, and you might look at, well, you guys have doubled, tripled, whatever it is, the capital you've raised every year, and that's great. Those are great numbers to see. But the biggest metric that we look at is, and it's kind of it's one metric, but it ends up being two metrics, and you'll see what I'm saying. It's repeat investors. And so what we want to see is that not only is somebody investing with us, but they're investing with us again and again and again. And what that tells us is that we have nailed that triad that Dan's has talked about, that know, like, and trust, that we have nailed every single one of those pieces. And that not only have we hit the first three, because a lot of times what happens, and this is true in any sales business, and this is for simplification purposes, it's investment sales. So we can rock those first three, but if we're not consistent after we've secured capital in ongoing communications, both from a high level perspective with marketing, with newsletters, with monthly updates, with distributions, et cetera, but then also when investors reach out to us, want to have a follow-up conversation with us, have a specific question they'd like answered. So if we're not consistent with those, then we don't get those repeat investors. And then we're constantly trying to chase new contacts, new investors, and kind of living at the top of the funnel, if you will, or the top of that triad. And so it's those repeat investors. And if we're nailing the repeat investor, and I'd have to, we'll dive more into this at the in-person intensive. We need a little bit better data around it. We're somewhere between, depending on a deal, somewhere between 65 to 70% of the investors in any given deal are going to be repeat investors with us. And we really, really like that number, because what that tells us is we're doing a lot of things right. Perfectly no, but doing a lot of things right. And it's very rare that a referral would come from somebody who's not a repeat investor. And so repeat investors had enough of a positive experience, consistent positive, multiple investment experience with us that they feel confident or comfortable referring a friend, a family member, a coworker, whatever it may be, to us. And so that really for us is the thing I personally probably monitor the most closely, or look at most closely, is those repeat investors and then the referrals that result from those.
Yeah, and
anything else you'd say there, Dan?
Yeah, and I mean, I would say that, those referrals are very, very key. I love seeing that repeat investor rate, because I've even had somebody on here, how do I balance between tapping into my existing investors again that I've already had to help me fund a deal versus bringing in new investors? And I would say do both, right? Yeah, we never say, old investors or investors that we don't want to have to worry about tapping into you again. We want to just, tap into some new investors. We always allow all of our investors to be able to participate in our projects. And matter of fact, I'd rather have everybody participate and fill them up and tell them it's closed and it's full, because it creates that sense of urgency the next time that you put out an offering, because they didn't get in because they didn't make a decision fast enough, right?
Yeah, and so I would say that question in and of itself is a little bit of a false dichotomy, because we have, there's a deal that we have right now that we oversubscribed on. And I had multiple investors reach out to me saying, hey, can you squeeze me in? Every single one of those people were repeat investors. And so I think the question itself just kind of, I would suggest a little bit of a mindset shift there, because it's not like you're going to your existing investors and asking for a favor from them. You're providing them another opportunity to invest in a high quality asset with a great operator. And where we're at now, and I think one of the things, that we'll probably talk about more, and I don't mean this in any kind of like a whatever, but having an abundance mindset about, there's a lot of investors out there. And just because you've locked in an investor one time, they're going to want to invest with you over and over again, and they'll invest with other operators as well. We encourage investors to invest with other high quality operators, and vice versa, to diversify. But I guess just it's the mindset there of you're providing them another opportunity to invest in a great deal with a solid operator is how I would think about that. And to Dan's point, open it up to everybody. And then when you have a deal fill up, then you've got the good problem of happen to lean on your acquisitions team some more to go find us some more great deals. So that's just a good indicator that you've got a great network that wants to continue investing with you.
Well, and one other thing, Eric, he's the one that asked this question here is that I think that sometimes we get in our own way with our headspace, because I've talked to multiple people who are newer operators, and they wonder, like, should I continue to hit my same investor list? Like, am I going to tap out, or like, are they going to get frustrated because they're seeing too many deals? And I think it's going to be quite the opposite for what you're thinking. As a matter of fact, I would rather tap into my same investors over and over and over again before I even brought in new investors. And Andrew,
Correct.
you can maybe even speak to this too, about this VIP list that we have.
Yeah, absolutely. And so I think, again, this is very, very much a relationship game. And one of the things that we want to stay away from is we want to teach the principles that we've used to be successful here, that Dan's used to be successful, that I'm using to be successful with my team. But by the same token, quality, especially here, is far more important than quantity. And I would personally rather have, say, an email list with, I don't know, 400, 500 high quality. I saw a question here about how important is your investor avatar. It's very important. You don't want to be marketing. If you're marketing to raise capital for deals, you don't want to be marketing to people that aren't accredited investors, that don't have the capacity to invest in your deals, because they may like you, more than anybody else in the world. But if they can't actually become an investor, then what's the point? You're not doing them any favors, and they're not doing you any favors. But no, I mean, I very much feel that way, that the quality and the relationships that you build here are of the utmost importance, and the quantity is very much secondary. And one of the things that we've done in order to communicate that value to our relationships is myself, as well as each one of my investor relations associates, we have a VIP list. And really what that is people that we really value them. They've invested heavily with us, and they continue to invest heavily. And before we ever launch a deal, we reach out to those folks, and it's not more than like 20 or 25 people on my list. And we let them know, hey, we're going to be launching this deal in a couple of days. Wanted to share it with you, number one, to get your feedback on the deal, to answer any questions that you have, and then also give you an opportunity to lock in equity early. And not only are they never bothered by that, I've never had anybody upset with me for sharing a deal with them. But the only negative response I get is, oh my gosh, I just, my capital is allocated right now, and I'm not going to have anything coming in for a couple months, but this looks like a really great deal. Please keep sending deals my way. And so I think that's something really key to remember as well, is you're not tapping a well, right? You're working with high net worth people that are earning more, that have financial freedom or passive income or retirement goals, that are looking to deploy capital, and you're providing them a valuable opportunity to do so. And they're going to be far more inclined to invest with you again, as long as you've been mastering this 5-step process, than they are going to be to go out and vet a new operator. Because every single one of these people, we're passiveinvesting.com. If you're a capital raiser, if you're an operator, every single one of the people coming to you does not want to do this on their own. This is a busy professional. It could be a doctor or a lawyer or an entrepreneur with a family and commitments, et cetera. And it takes time, it takes mental energy to vet an operator, to do research, to check references, to do whatever it may be, to where you feel to where you as an investor feel comfortable to invest with somebody. And so when you are providing them ongoing opportunities to invest with you, they appreciate that, because that means they don't have to go out and find somebody else, that you're bringing those opportunities directly to their door.
Great points there. And I have a couple of questions in here that I want to get to, and we're going to get to the ones that are in here. There's 6 of them pending right now. But one of the things I wanted to mention to you is we talked about the referrals, we talked about the one metric. The one thing I haven't talked about is what is the biggest strategy that we use to continue to fill our top of funnel, if you will, with new investor leads. So I want to share that with you right now and kind of start it off with a story. And so you can kind of understand our thought process and our mindset with being able to fill our funnel. And, some of you on here may be thinking, well, Dan has, tens of thousands of people that are on his email list. And I'll tell you, we don't, right? I mean, for our MFIN list, which is our Multifamily Investor Nation, which is kind of how you found us with this, we do have, I don't know, probably 50, 60, 70,000 emails, but we do not send the same information to those people as we do with our own cultivated list. We keep those separated. I have 2 different email lists for that. I have one software for our passiveinvesting.com, a passive investor list, and we have a completely separate email list that we're using for this, for MFIN. And we do that because I want to make sure that we are incorporating we are only communicating with those investors and incorporating communications that are dialed in specifically to our passive investors. I don't want to promote to our passive investors about the MFIN con. I don't want to promote to them about these types of webinars. I want them to only hear from us about things that they want to hear from, which is they came to us to be a passive investor, and we're going to teach them stuff about being a passive investor. We do have weekly webinars that Whitney does for our group. She's our director of investor education. She does all of our master classes. So she brings on and some experts as well as some of our own team members to talk about different areas that passiveinvesting.com can and encourage people to want to invest. But I don't know, Andrew, you might still have the software up for us to be able to see on the CRM how many investors we now have on our list, like the overall number of investors. Mm-hmm. I can't remember the exact number, but do you have that in front of you?
I do. It is 10,477.
So we have 10,477 over the last 4 years that have come to the website, filled out their information, so they want to invest with us. So we have roughly about 2,000 investors. So 10,477, that's roughly 19% of investors that are actually, so our number has gone up just a little bit, but it's right at 19% of the people on our email list that have invested with us. That's, it seems low, but it's actually on the high side, right? I think it's because of all the different things that we're doing to be able to cultivate those relationships and build relationships with our investors, and those strategies that we're teaching you right now, and some of the additional strategies that we're going to be able to teach you when you come to the intensive, right? But that 19% is very, very powerful. It's also, I get a lot of phone calls and emails from like new operators that are like, I thought I could raise, $1 million or $2 million. And because I had, these 20 investors that told me they can bring in 100,000 a piece or 500,000 or 50,000 a piece. And I go out and find a deal and present it to them, and I can only get a couple 100,000. And I always tell them, like, that's normal. Like, if you got 20 people, you can't expect more than about 5 to 6 of those to actually bring in 50 to 100 grand. And if it's one of your very first deals, they're probably only going to put in a small amount of money, right? And so that's one of those things where and then of course, some people are asking like, well, what do I do to those people that won't invest? Well, don't badger them. They're going to invest. They might eventually invest.
Threaten them.
Go to their house and like put a picket fence in front of their house.
Ask them why they don't like you.
I mean, you can't get butthurt about that, right? Because sometimes it takes a while. Like, I mean, you've heard it too, Andrew. I've been following you guys for a couple of years now, and I just now decided to, get off the pot or squat. I mean, it just it's one of those things where sometimes different people take different levels of time to be able to go from that likeness to trusting you. Right. Mm-hmm. And of course, sometimes when they go from that likeness to trusting you, they get to the point of trusting you and they've run out of all their capital because they invested it somewhere else, or maybe they had a big tax bill or a hospital bill or some other expense come up, but they are still interested. They want to stay connected with you. When the time is right, they're going to invest. I had an investor at the beginning of this year, 2023. He's actually here local in Columbia, South Carolina, and he texted me first of the year, and I've kind of stayed in contact with him because he's local, and I've seen a couple of the things that projects that he's been doing around town. As I would text him whenever I drive by one of his sites or whatever, and say, hey, just wanted to let you know I saw this site over here at the local GC in town, and just touching base with him, and he's on our email list. He gets all of our communications, and he finally reached out. And he said, Dan, I think I'm ready this year to start investing. I've been following you guys for about 3 years, right? And so it just is a process of just constantly staying in touch with them, making sure that you have a process in place to obtain their physical mailing addresses. So not only are you emailing them, but you're also going to tap into the United States Postal Service and start mailing them stuff too. You might be thinking, well, in this day and age, why don't I just do an electronic newsletter? Well, you could. You'll get a little bit of response there, but I mean, with us, we have a very highly cultivated email list, and we get about a 52 to 53% open rate with our emails every single time we send out an email. Not with MFIN. MFIN is a little bit lower than that, but with our passiveinvesting.com list, which is a very highly cultivated list of just passive investors that have reached out and want to be on our list, that's a very high open rate. If you know anything about email marketing, that is phenomenal. People would die to have that kind of an open rate. But Guess what? I still looked at it and I was like, that's still 47 to 48 of those people, 47 to 48% of those people that are not getting our communications somehow. They've told us they want to be communicated with and they're not getting it. And that's where those physical newsletters come into place. And so when you come into this intensive, we're going to share some additional strategies that we're doing to be able to make sure we get our investors on that list, make sure we do it in the right way so that we can continue to provide that level of communication with them via those physical printed newsletters. Okay. Now, what's this biggest strategy, right? So I've already had somebody ask me this on the Q&A box earlier, and that is the question that they asked was, what is the number one thing that you do to be able to get the most investor leads? That's the wrong question to ask. I'll just be frank with you. It's the wrong question. The question you should be asking is what are all of the different strategies and things that you're doing to be able to attract investors? So let me tell you why. So about, I don't know, it's probably been 10 years ago now. About 10 years ago now, my wife and I decided that we wanted to take a trip to Sanibel Island, Florida. And when we went to Sanibel Island, Florida, we sat in we didn't sit. We were in this. It's not an Airbnb, but it was a resort. Actually, if you ever been down there before, it was the South Seas Island Resort. Beautiful island resort, beautiful area. It got pretty much demolished and decimated during this last hurricane that came through, Hurricane Ian. But they're in the process of rebuilding. But 10 years ago we went down there and it was just absolutely gorgeous. You should definitely put it on your bucket list. But we were actually at the South Seas Island Resort. There was a golf course on site and everything. But we were actually the balcony off of the unit that we had rented overlooked the ocean, right? The Gulf of Mexico. So we literally could jump into the Gulf of Mexico from our balcony if we wanted to. That's how close we were. It was just gorgeous every day, every morning, getting up. We enjoy having a cup of coffee together and get out a good book and reading and just, having an intellectual conversation with each other. We still do that today. Like every morning. This morning, we got up at 5 o'clock this morning. My wife went and grabbed our cup of coffee because it's on an automatic coffee maker. She brings the coffee in. We sit down in front of our fireplace in our master bedroom. We have the little 2 chairs. We just sit there and prop our feet up, and we both sit there and read and kind of talk to each other about the day. And usually we do that for about an hour, from like 5 to 6, and then she has to get up and get the kids ready and get them out the door and all that kind of stuff we have to do as parents and it's just life in general. But we did that same thing when we were there in Sanibel Island. We of course didn't have the kids to have to worry about because it was just us, but we still enjoy that time of 45 minutes to an hour of having that time with husband and wife together. And so we did that here on the balcony every morning because it was beautiful weather outside and the views were great and seeing dolphins go everywhere. But anyway, so right in front of, I'm getting too deep into like how good the trip was now. I'm losing the story. But I wanted to paint that picture for you so you can kind of see where we were. But right in front of our, kind of off to the side of our balcony was a dock. And every morning we were out there, there'd be 1 or 2 or 3 fishermen that would go out there and try to throw a rod out. and try to catch some fish. Not a one caught anything. Every morning we'd see it, and about 3 or 4 days into the trip, we saw across the peripheral vision of our eyes, we saw around the building was this guy in a with a wheelbarrow behind him, and he was standing there like taking this wheelbarrow behind him, going through, and on the wheelbarrow he had like, I don't know, probably 15 fishing rods on the back of it. He had all the bait and the tackle and the gear and the hat with all the stuff flying off of it, pictured that a true fisherman at heart. And behind him was his wife, and she was, head deep in a book. As she's walking, like that. And he comes in, and there's a bench right next to the dock. So he didn't even like go to the dock, but he actually came in, and right behind the bench, he pulled his wheelbarrow and parked it right behind that bench. And then his wife came in, and she just kind of went to the bench, just sat on the bench, and just continued to read her book. Well, we're like watching this whole thing, and just like persist here, and we're just like, I wonder what's going to happen here, And so what he did was he took the contrarian view, and he said, you know what? I'm not even going to go on the dock where everybody else is trying to go catch fish. I'm going to go over here, which is off to the shore side. And he took his fishing rods and he started putting them up, boom, put them in the ground. Got his next fishing rod, boom, put it in the ground. And by the time he got to the last fishing rod, again, I bet there was probably at least 12 to 15 of those fishing rods that he stuck in the ground. Guess what happened? One of them started to bite. And of course, he's not taking each fishing rod and putting them in the same area. He's putting them all over the different spots, right? And it hit me as you started to do this. I'm like, I know what he's getting ready to do. And you guys are probably thinking the same thing, right? He's not dumb. He wants to catch some fish, right? He wants to eat that night. And so when you eat what you kill, you're gonna try to do a lot of different things to be able to do that. And so what he was doing is he said, you know what? There might not be any fish over there right now, but there might be over here, and there might be over here. And I bet somewhere around here there's going to be some fish. So by the time he got the last one in, the first one started to bite. So he ran over to that first one, started reeling that fish in. And this is like from every day so far, we haven't seen any fish being caught, right? But he put that fishing rod in there, started reeling it in. He reeled in that first fish, and by the time he got that fish off, the next one started to bite. He'd go to the next one and start to pull that one in. And then he'd go to the next one. There was like 3 or 4 of them starting to go. And then he's like, dear, I need you to help me. We've got all these fishing rods that he's caught all these fish on, right? And he's frantically getting all these fish in. Of course, I'm looking at this from the top, like grinning ear to ear going, that's a great, perfect picture of the multimodal approach to marketing that we must have in order to have a consistency in the number of leads that are coming into our business. And it's not just in this kind of a business, right? It's in lots of different types of businesses. If you incorporate that multimodal approach, then you'll create more of a consistency in that flow of leads coming in. And guess what? The podcast 1 month might bring in, a ton of leads, and then the next month it might not bring any. But it's okay because I got the YouTube channel, and I have my LinkedIn content, my Bigger Pockets forum working, and my referrals coming in. And I have all these different tentacles that are out there trying to constantly attract new investor leads into us. So I'm not relying on just one magic bullet. And that's why you have to start shifting your focus when you go to conferences. Don't just ask them, hey, Andrew, what's the number one thing you do to attract investors? That's the wrong question. You shouldn't be asking that because they don't even know what the number one thing is. They're just going to tell you what's the best in the last probably 30 to 60 days that's brought in new investors. You should be asking them, what are all of the different things that you're doing to be able to attract investors into your fold, right? And that's the shift in the mindset and the idea that you have to have and put in your head in order to attract new investors is start with one thing, right? Because you think about how can I get 12 fishing rods out attracting new investors like that? You can't. You got to start one at a time. Start with that first fishing rod, get it out there, get a process in place, make it consistent. Then start with the second one and the third one and the fourth one, and you start building on. So then you start to have this exponential benefit to the point where now when they get on a phone call with our investor relations team, like Andrew, he's going to go, so how did you hear about us? And they'll be like, man, I've been hearing about you all over the place. I heard you on this podcast and that podcast and this webinar, and I saw you on YouTube channel, and I just am seeing you everywhere. I just figured you guys were legit incredible, right? And so it makes it harder for you to track exactly where some of these people come from, but it creates that exponential benefit for you when you're trying to attract new investors into your fold. Absolutely. Any comments there?
No, I mean, I just think that's the people can get into analysis paralysis in terms of what how you want to market or what you want to do. And one of the pieces of advice that you've given, which I think is very, very important, and we will probably dive into this more at the intensive, but pick something you'll actually do. So if you don't like talking to people, then don't start a podcast. Find something that you'll actually do consistently, and then build on that, or hire it out, whatever it may be. But yeah, I think the approach there, and putting a lot of different lines in the water, I think that's a great story, great illustration. That's absolutely the way to approach it.
Well, let's tackle some of the rest of these questions. We got 19 minutes left. We've finished out the content here. If you love the content that you've heard up to this point, I promise you, you're going to enjoy it when you come down here and spend 2 days with me and my team, and really be able to cement that process in place. And I'm telling you, you won't regret it. And the people that have done it are sending their team members down here to get that education as well. And it's interesting, because I've talked to several of them, and like, every new person I hire, I'm going to send down there, because that's how valuable it is. So if you haven't registered yet, make sure you do that. I'll type it into the chat box here. You have between now and the end of the webinar today at 4 p.m. Eastern to register and lock it in. So while we're answering some of these questions, go ahead and take that time to click that link and complete that registration process. And hopefully we fill up the webinar. Hopefully we fill up the intensive but with the people that are on here today, because of all the value that you've seen up to this point as well. So look forward to seeing you there. If you have multiple people on your team that you want to come to it, because I know some people are like, I want to send 3 or 4 or 5 people of our team down there, reach out to Melissa on our team, Melissa at passiveinvesting.com, and it's M-E, I'll just type it into the chat box here so you can have it. She might hate me for doing this, but I'm going to do it anyway. Just email Melissa at passiveinvesting.com and just let her know. Say, hey, I have a bunch of people. If you have just 2 people, we're probably not going to give too much of a discount there. But if you have 3 or more people and you want them to come in and there's still space available at the end of the webinar, we can certainly try to get you in for that. Anyway, so let's answer some of these questions. I know the longest standing question in here is from Alan. So let's go ahead and tackle this question from Alan real quick here. How did you go from $4 million in 1 year in 2018 to raising $32 million in 2019? What actions and steps did you take? We are approximately at $4 million, and what can you share with us to get to the next level? Alan, that is a long answer to that question, but I'll give you a few little tidbits right now to kind of share with you some of the things that we did. But I can go into a lot more detail, and I will be going into a lot more detail, because one of the things we're going to do at the intensive is we're going to break down each year that passiveinvesting.com has been into existence, and what we did to be able to stabilize the company, increase our team, and how we grew strategically each position to be able to get to where we are today, to be able to consistently raise capital, find new deals so we can have capital to raise for, but then also how we are properly managing these assets. Because all day long, we could talk about raising capital and bringing money in, but if you lose that money, you're sunk, you're done, right? So we want to make sure that you have that process in place to build out the team, so you can make sure that you're monitoring the finance side of things and the asset management and all those different key components, from acquisitions and dispositions and the entire kit and caboodle, if you will. Okay. But one of the things that we did that I think was very, very pivotal for us is we built out the authority platform at that point in time, which is the Multifamily Investor Nation. And a lot of people at that time were like, oh, are you getting into coaching and consulting? And of course, like you guys have heard about, we're not doing coaching and consulting. We don't do anything one-on-one. We don't have the time during the day. We would rather focus on continuing to grow the group. So we don't want to divert our attention to doing those different types of tasks. And so we set out to start the Multifamily Investor Nation to provide as much free content, free, high quality content that provides a ton of education and value. We don't hold back anything. So all of the content that I'm going to share with you at the Raising Capital event, at some point in time, we've probably said something about it on a webinar somewhere, and it's posted on YouTube somewhere, right? But when you come to the intensive, we're going to lay it out for you in a very organized format and an organized flow, so you can see exactly what those different steps are. But when we created the Multifamily Investor Nation, The goal of it was to be able to become the expert in the space, so we have enough credibility that people look at us as that expert and go, well, these guys are teaching other groups how to do it, and other groups are also investing with this group. So you know what? I want to put my capital with them. And they also learn on some of these webinars about what we're doing, and they go, holy cow, this is a lot of work. Here's my money, Dan. You do it for me. And that is exactly why we created the MFIN. And it was actually in December of 2018. Actually, it was November of 2018 that I came up with the idea of starting the Multifamily Investor Nation. We set out at that point in time to set up meetup groups around the country and also to host our very first virtual MFIN summit, which was done in January of 2019, and we've never looked back since. And now in that MFIN group, we have, I think it's probably close to 60,000-70,000 members that are part of that free educational platform, and an authority group, which has really catapulted us. And doing that has also increased our reputation in the industry too. I mean, I get invited to speak all over the country and get to share a lot of our knowledge, especially now that we've seen some success. But even back then, because at that point in time, we were the ringleader for the multifamily space to be able to bring in investors and bring in not just investors, but be able to bring in people to talk about these different pieces of the puzzle. So, did you want to say anything else there, Andrew?
Nope, I think you hit it.
Okay. Let's see here. So let's go to the next question here. Did you invest with a GP from the start with a small amount of capital you raised to come in as a co-GP to get it promoting the deal? No, we did not. We had to eventually, because we told them we were going to raise $500,000 and I had to bring in my own capital to close it out, but that was not the purpose of it. If I would have raised that full $500,000, I would not have put all of my money into that, right? Matter of fact, I still probably would have put at least probably 50 to 100,000 in, because every single deal at this point, I personally, my wife and I have invested in every deal that we've ever put together in front of our investors, because we want our investors to know that we trust this deal well enough that we're going to put our own money and our own hard-earned cash into those deals. And it's not usually a small amount. You can ask Andrew, he sees the numbers. It's usually seven figures or more in a lot of these deals. Some of the smaller ones, it's smaller than that, maybe 500,000, 250, but we're always putting money into every single one of the projects that we do. And it's one of those things I think is very, very important, very valuable for the investors to see that, and to see that we're aligned with them. But I've never done it to get it promoted in the deal. But I have had people reach out to us and say, hey, if I put in $5 million in your deal, would you give me a portion of the GP? And we're like, no. And most of the reason why is because we don't need that, right? I would prefer to have a bunch of $100,000 investors and one big check for $5 million, because that person who's got $5 million in, they're going to probably be breathing down my neck every single day about how the performance of that asset. Where the people who have 100,000 in, I'm constantly communicating with them. I'm sharing with them the financials, the way our normal process is, and they're okay with that. But once you start to get into that institutional level of capital, it's a whole other level of headaches that you have to deal with. But what's funny is that whenever we talk to institutional groups that we're buying assets from, we tell them what we do. They're like, man, that must be a big headache to deal with 500 investors. I'm like, if it was 500 institutional investors, yeah, absolutely, I would agree with you. And that's what they're used to dealing with. But our investors are very easy to get along with, and very few people actually have a few people actually reach out to us on a regular basis to have follow-up questions, because they trust us, and they have a smaller amount of capital that's at risk. Next question here is, are you experienced in a Freddie Mac capital raise? We will need to raise $8 million to close and take over a $6 million loan in place, 4.75% loan. So the answer to that question is yes, we have. We've done a couple of Freddie Mac loans up to this point. We have definitely dealt with that. Whenever you're taking over a loan, usually you have to bring more equity to the table, because you're going to have a lower loan to value ratio when it comes to buying an asset with in-place debt. So a lot of times what will have to happen is if they allow it, which I'm not sure, I can't remember the exact rules around Freddie Mac. I think they may not allow supplemental loans, but a lot of times you can get a supplemental loan on top of with a second lien holder position on top of the initial senior debt position. Some lenders don't allow you to do that, so you have to think about that when you're buying an asset with and you're assuming that in place debt. But yes, we do have some experience with that, and you do have to have experience with Freddie Mac in order to do that as well. This next question in here, Andrew. I know we only have 10 minutes left, and I do want to keep it right at that 4 o'clock time frame. So we're going to rapid fire some of these questions here. So One of the questions in here is, I just quit my job on Friday to continue growing my capital raising and be on additional acquisitions this year. I'm going to throw this question out there to you, Andrew. What are some of the KPIs that we're measuring from an investor relations perspective to be able to raise capital?
We're measuring a handful, and we are building out measurements for way more. We've already mentioned some of them here, but repeat investors is a really key KPI that we're measuring. We're measuring like investor conversations and interactions on a weekly basis. So as we've mentioned already, we can't control who invests with us, but we can control how proactive and how consistent we are in our communication. So that's a really, really key one. We measure how quickly deals fill up. We measure how many people commit versus how many people actually fund. And then some of the metrics that we're building in now, like one of the things that we want to see now is like what the lifetime value of a referral source is. So we talked about how valuable referrals are. We have one person in some cases that will refer 5 or 10 or 15 people to us. So, we're looking at velocity, how quickly deals fill up, how quickly certain asset classes fill up. But the biggest ones from an investor relations perspective, like the key top of mind ones, are how many interactions we're having, repeat investors, and referrals.
Yep. All right. Next part of this is, how did you decide to transition to multiple asset classes? Very good question. We had a lot of investors once we started to acquire a lot of multifamily asking us, "Hey, are you going to diversify into other alternative asset classes?" And the answer to that is yes. We've had that plan from the very beginning, because that's one of the reasons why we called the company passiveinvesting.com and not multifamilyinvesting.com. We want to keep ourselves open to be able to add to additional asset classes. And I will say that has been one of the keys to the amount of capital we've been able to raise, because even right now, it's been more challenging to find some multifamily deals, and to be able to have some other asset classes to go into, I think is very, very key. Jeff is asking here, can you talk about how deal finding relates to raising capital? Don't you have to have the deal first? No. Matter of fact, I would encourage you to find investors first before you have a deal, because the worst thing you can do is get caught with your pants down by going to get a deal that you have no clue how much capital you can raise because you don't have any investors, and you go and get a deal and then you lose that deal because you couldn't get the equity. So the answer to the question is, you should be finding both at the same time. And yes, you have to always be finding a deal, because if you don't find deals, you're never in front of your investor with a deal, they're going to lose interest. They're going to go put their money somewhere else, right? So you want to make sure that you have both investors and you're finding deals at the same time. But if one was to come before the other, I would say you need to be able to have investors first. That's why, Jeff, it's a very good idea for you to go and co-GP with somebody else first, and just raise capital and do maybe some of the asset management side of things for SEC compliance reasons, which we're going to talk about a lot of that SEC compliance for doing co-GP relationships and 506 Charlie and Bravo and Regulation A at the event coming up in February. So you definitely want to make sure you have both of those going on at the same time. Does PI.com believe in creating an avatar as an ideal investor target, or do you simply focus on reaching out to high net worth accredited investors? So I would say, the answer to this is, we don't necessarily have an exact avatar for who we're looking at. We have multiple avatars. Like a lot of our investors are business owners, and they do weigh more on with males versus females. We also have a lot of physicians and engineers and attorneys and finance people that are and people who have gone full cycle on selling businesses. Those are the types of avatars we're going after. We're not typically going after somebody who, inherited a bunch of money and they now try to place that capital. We're not trying to go to people who have no money to teach them how to do this to be able to make more money. That's not what we're doing. So at the end of the day, yes, we do have an avatar, but it's not as rigid as you may think. Rebecca's asking, I'd love to hear more about your VIP investors. What other perks do you give them besides early access to deals? So that's something, Rebecca, right now that we are finalizing some of those things. We have some things in place right now, but we're going to share with you the entire thing that we're doing. Actually, Andrew is smiling because he's going to be the one presenting about these VIP investors at the intensive coming up in February. So we're going to dive deep into that as well. Do you leverage any existing funnels for passiveinvesting.com? I am just starting to read about Russell Brunson about using existing funnels, so wanted to see you all use anything like that to help raising capital. So Right now, we're not necessarily leveraging any of those existing funnels other than with like MFIN, right? So the Multifamily Investor Nation, when we present deals to our investors, we do send an email out to that list as well. So all 70,000 of those people, if they haven't heard that we have a deal, we do send it out to them. Of course, they have to join our list before they get access to the deal. So we're constantly moving people from that MFIN list over to the passiveinvesting.com list as well. Anything else to add there, Andrew? Okay. All right. This was a hard lesson learned on one of our first ones. Yes. So the lesson I think he's talking about here is about, working with an operator and saying, hey, I'm going to raise, $2 million and coming short, right? And you want to make sure that you have a realistic expectation. And the problem in our headspace is that we sometimes think that we can do more than we really can. And you want to tell that operator how good you are, but you would be better off to go in and say, hey, I can raise 500,000. Even if you think you could raise 10 times that or 5 times that, if it's your very first or your first couple of projects you've done, grow slowly. Start off and get those quick wins of raising 500,000, 750, $1 million, instead of trying to overestimate and under deliver, if you will. You mentioned an education specialist on the team. Are they educating the new passive investors? Do many new investors require a lot of education to understand the deal? So Andrew, I'll throw that one over to you to answer.
Yeah, it's a great question. So the educational specialist, really that's Whitney Elkins-Hutton, and she's our director of education. She does a tremendous job. And really the idea, she's not necessarily educating our investors about a specific deal. What she's doing is doing comprehensive education about kind of all the things that touch passive investors or LP investors. So we'll dig into asset classes. So we've done master classes on car wash, storage, and multifamily hotels. We'll dig into markets and how we evaluate a market. So there is a lot to educate our investors, but it's generally not, if we're talking about a specific deal, we're going to do a webinar with the managing partners and maybe somebody that is specific to the operations of that business. But really the idea of the investor education component is general valuable content for our investors. So again, it's just another touch point and another way to add value to our investors for free.
So great. Thank you for that. Next thing here is, how important is it for passiveinvesting.com to offer deals across different asset classes? And do you believe you would be able to raise more or less capital if you focused on just one asset class? Andrew, I'll let you speak to that, and I'll say a few things towards the end as well.
Yeah, absolutely. So I think that the proof is in the pudding, and we believe very much so that we're able not only to raise more capital, but also provide more value. And this market space that we're in currently is very indicative of that. Multifamily and self-storage, which are more institutional, traditional asset classes, the returns have been really impacted. There's more demand, there's more investment dollars going into those assets, changes in debt markets, et cetera, et cetera. And so one of the things that we feel like is a very valuable thing that we do, I'm not saying this is what every operator should do, but for us, having expertise and having being invested in multiple asset classes, having those being offered as opportunities is a key differentiator for our group, with the caveat that before we go into an asset class, or better said, before the managing partners elect to go into a new asset class, they make sure that the system and the process and the team in place for our existing asset classes is running very, very turnkey. So we didn't jump into self-storage until we had a very robust acquisitions and asset management, property management team in place for multifamily. We didn't jump into car wash until we really felt like multifamily and self-storage were shored up. So I would say that it's a huge value for our group. It's something that I think really sets us apart, but it's not, it's very important to set a great foundation so you don't take your eye off the ball of a core business.
Yeah, that would be the one thing I would say, just to kind of like dovetail that, Andrew, is that in the beginning, focus on one asset class. Mm-hmm. You don't want to start off by going into multiple asset classes. Start off with one asset class, and as you build your track record, as you build your credibility in that one asset class, then start to branch out as you build out another team to silo into that new asset class that you're trying to bring on. So good points there, Andrew. A couple of comments here from some people who are on here who have actually been on is, awesome work, gentlemen. This is from Christian. Highly recommend the intensive. I had a blast with Dan and the team. Christian Carrillo, it was there. Good to see you on here, Christian. Great to be able to spend some time with you as well. Iris Kevin, same thing. Highly recommend the workshop. I've a great content and made some great connections who I still interact with. Sandy just jumped in here and said the connections are invaluable. Just think about it, being in a room full of people that are doing things on a high level, and you instead of trying to network with 500 people in a conference, you get to network with some really good, solid, high-level people in a small group, in a small room with only 30 people plus our team. So very, very valuable room to be in. And another person commented on here, big MFIN fan for the web resources. How about a favorite capital raising book? So we are actually in the final stages of writing a book ourselves. We're hoping by the end of the first quarter, maybe the start of the second quarter, we'll have it released. And so we actually have something in the works. So stay tuned for that. We will be sending out some information about it. And it would be a great resource for you to be able to learn some of the different strategies that we have. So Keona's on here saying, mahula. Maybe you can say that better, Andrew. I think you've been to Hawaii. From Maui. I'm going to Hawaii, but I need to learn how to say all these different phrases here.
Mahalo.
Mahalo. Great program today. Thank you for that.
Mahalo.
Mahalo. One of these, we'll get it figured out eventually. They're laughing at us now. All right. Last question in here, 401. Have you ever missed any distributions, and how do you communicate it? Well, up to this point in the market, we haven't, but we have recently on 2 of our assets, we've stopped distributions because the debt service has gotten too high on those assets that we've had to stop distributions. It's all about communication, right? Don't withhold communication from your investors. So we had to communicate with our investors. The debt service went from this to this. The cash flows and the rent growth is going from this to this. So it's doing well, but it's not surpassing the cash flow that's on those assets. Thankfully, we bought great, interest rate caps, so we're capping our interest risk there. But anytime you have to halt distributions, delay distributions, move from monthly to quarterly, or from quarterly to biannual, or once a year or whatever, you must make sure that you're communicating that with those investors and doing it very well. Jesse is just saying, amazing guys, thank you. And Eric saying, great info, Jen. Thanks for serving the capital raising community. So we'll leave that promo code up for those of you who haven't done it for the next 24 hours. We'll send this recording out to make sure that you can do that. If you haven't registered yet, make sure you do it, because once those spots fill up, they will be gone. And I look forward to meeting each one of you. And also, if you're interested, jump over to the mfincon.com website to register and find out more information about the MFINCon coming up. We got Alex Rodriguez, A-Rod, the baseball player. We also have Dr. Robert Cialdini, who wrote the book Influence, The Art of Persuasion, one of my favorite authors. And then we also have the CEO of Taco Bell, who used to be the CEO of Adidas TaylorMade, Mark King. He's going to be there as well, talking around some leadership principles too, and as well as 50 other speakers. So thank you everyone for being here, being very attentive, asking lots of questions. Thank you, Andrew, for being here and sitting here with me for this 3-hour marathon, talking about things we love to do and love to present on, which is raising capital for multifamily as well as a lot of asset classes. So,
absolutely. Well, thanks y'all for jumping on with us. Look forward to seeing some of you at the intensive. Hopefully, more of you at our live event in Charlotte in June. But thanks for having me on, Dan.
All right. Thank y'all. Appreciate it.
Bye, y'all.